What if I told you you could get a copy of the EdgeFinder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of EdgeFinder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the EdgeFinder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Good morning, guys. Welcome back to another live stream. Hope you guys are doing well. I was just looking this morning at some of the earnings season stuff taking place right now. Yesterday, a company that I personally like for the long term, ServiceNow, actually had a really, from what I can see, a very strong earnings report. And yet the stock itself is down, I think, 12% here with the stock market opening up in 30 minutes. I had my eye on this because I'm probably going to play some options on this, probably sell some puts. I've actually sold puts on this one and did really well with it. Well, actually, no, I take that back. I had some losers on this, and then I recently had a winner with the stock price bouncing here. I was able to sell some cash secured puts, buy them back for much cheaper, basically a nice little win there. In fact, I've been on a bit of a winning streak when it comes to my options trading. If you're unfamiliar with options trading, I'm not going to try and explain all of it. I actually have a video in the coffers of the editor for upload on my secondary YouTube channel, but I have been on an absolute win streak here recently with my options trades. I played ISRG, Intuitive Surgical Earnings. I also closed out of that XOP bullish position. Nice little bounce in oil. Gave me the chance to exit that. I took a profit of $760 or a 50% of max return on that options trade. I closed out of ISRG for a 60% of max profit on that position. So I've been playing the options side quite heavily here recently. And with ServiceNow back down today, I am back on the watch. Back on the watch for an opportunity to sell some cash secured puts on ServiceNow. It's a company I like for the long term. Anyways, I just wanted to show off this thing we built. It's our report card for earnings generated by AI. This is now added within your stock box. If you have stock box, it is in there. What this does is this is to me the most important part that it does, because it does of course show you the earnings, the revenues, whether they beat expectations, etc. Which they did. They beat both, but stock market did not like it. Wasn't enough. Stock sold off. But what's interesting here is the forward guidance generated by AI based on what was said in the earnings call. That to me that's the sweet spot, so that I don't have to listen to every earnings call, but I can get the gist of it. ServiceNow exceeded high end of Q1 revenue guidance, raised full year subscription and revenue outlook, and provided Q2 subscription revenue guidance of 3.815 to 3.82 billion. Forward guidance is strong and raising. So, this is a stock that to me, long term, I feel, very happy potentially owning. We were kind of expecting in the realm of 10% in regards to the average move. The previous release in January, we saw a 10% move on the stock. And so, I am going to play ServiceNow most likely here today when the stock market opens up. Anyways, I know not everyone here is a stocks and options trader, but I just wanted to share that because it is, it's a thing that I do pretty frequently is trade options. Somebody asked me yesterday what portion of what I do is related to options trading. And I would say it's probably about 1/3 of what I do, maybe a little bit less, but it kind of depends the time. Like right now, recently, I've been getting quite a few options trade setups specifically in software stocks. I've been playing software stocks quite a bit on the option side, mostly selling cash secured puts, getting assigned, selling covered calls, the wheel strategy, if you're familiar. What is the most strategy you use for options? Joey, I assume you mean like, what do I primarily? So I don't buy options. I almost exclusively, rarely will I buy options, like buy a call, buy a put, but I'm less directional and more kind of swing and position trade oriented, where I'm actually selling cash secured puts, I'm selling covered calls, and it creates very consistent income overall. There's of course risks with everything, but I actually have a strategy video dropping on my YouTube channel, Trader Nick Stocks, today, hopefully. So keep an eye on that, because it's a long presentation I did yesterday, and I'm excited to share it with people who are, interested in exploring the option side. I've sold a ratio spread with a 1-year expiry for $60 on ServiceNow. Accumulating premium is much better than dividends. Nick, Theta Farming. Yeah, Boulette, we're on the same team there. Theta gang, right? Anyways, guys, I adopted a cat. I don't know. Maybe James is a cat guy. He's got a cat. I adopted a third cat. She was an outdoor cat. She lived on my porch for as long as I've been at my house, owned my house. We have had this porch cat. I just adopted her recently, and she is happy, man. She is eating and sleeping. I think she's enjoying her retirement now that she's moved inside, but she is really sweet. Anyways, you may hear her in the background. Nasdaq, S&P 500 were slightly lower this morning. I've got a couple of trades I want to talk that are more directional, more of the primary thing that I talk about on this YouTube channel, which is my macro and momentum trend following trading strategy. That is the one that gets more attention on this channel because options, again, is not for everybody. And when it comes to options, although it plays a big role in what I trade is also the macro momentum stuff, which is more directional in nature, meaning I am making directional calls on where I think markets are going more decisively. Whereas when I'm selling options, I am directional, but not nearly as much. I'm still buying, or selling puts on stocks that I like. So I'm making a directional call to an extent, but it's not the same as long with a tight stop or short with a tight stop and trailing it, right? Nick, are you bored about talking about the same things on these live streams? That's a good question. And the answer is not even close. I mean, for me, trading is exciting every single day because markets are changing every single day. I'm learning new stuff all the time. I am, following the latest in regards to geopolitics and macroeconomics. I'm learning new things all the time. I never get bored of this stuff. It's what I love, and honestly, I think that if you want to be a trader, you really should have that same level of interest. And if you don't, there's other ways to make money than trading. Like, trading is very difficult. I only would say it's worth even trying if you genuinely love learning about markets. Let's talk about gold. Yeah, sure. Let's take a look at gold. So gold, I know I've been harsh on it. I know I've been saying mean things about trading gold, that it's really boring right now. And so I want to apologize in advance because it's still boring as anything to trade right now. Gold is just asleep at the wheel. If you think about this, it kind of makes sense. I do have one trade open on gold. It is not a short-term directional one. It's an options trade. I'll talk about that in a second. But here is why I am pretty neutral at the here and now for gold. If we look at inflation, and we did have jobs numbers come in this morning, weekly jobless claims, is that right? 214, is that the latest data, or is that last week's? I'm blanking. I think that's the latest. Let me just check that here. 214. Yeah, that's the latest. Okay, so EdgeFinder's got the latest data here on this. And so 214, we did have weekly jobless claims slightly higher than expected. So that's slightly positive for gold, but still the overall jobs market data, it definitely leans more in favor of a bearish story for gold. Why? Because the jobs data being strong is bullish dollar. Strong dollar typically puts downward pressure on gold. Not always, but most of the time. When we're looking at institutional activity for gold, we are still getting a bullish rating because institutions are still very long exposed on gold, according to the Commitment of Traders data. The latest change, we've recently seen an uptick or an accumulation of gold in the latest week-over-week change. The 4-hour and daily chart trend getting a bearish reading here. I don't know that I think it's bearish per se, but the 4-hour chart has definitely lost some of its speed. I just, when it comes to gold, when it comes to anything really, I want to have a nice synergy between what I think is the big three for my own trading strategy, which is fundamental analysis, technical analysis, and sentiment analysis. Going through each one of these, we kind of have a mixed bag. Technicals for gold look pretty choppy and range bound on the 4-hour chart. So I would say it's kind of neutral. Fundamentals look very mixed. And if anything, slightly more bearish for gold, right? Strong jobs data, decent growth metrics. That's not the type of environment where I love gold, right? So, and then sentiment analysis, I would argue, is actually somewhat positive for gold. You have institutions still very long on it. So this is too mixed for me, right? For me to take trades, like I want to see my system aligning very strongly with everything. And so when I look at, gold, I'm getting this neutral reading. But what about if I switch over to what we've been talking about on the channel a little bit more here recently, is like the Russell or S&P 500. Look at how we have our categories this is all automated, all blue, right? EdgeFinder scores a +9. Technical score is positive. Sentiment and COT data, right? Crowd sentiment is getting a little bit pessimistic. That's giving us a bullish contrarian read. Institutional activity, big money is recently buying Russell. We have a 4-hour and daily chart upward trend. We have a seasonal uptrend in this portion of the year. We've talked numerous times about how April into May, into June is typically a strong period of time for the stock market, historically speaking. Let me see if we also have the inflation data, a little bit neutral here, right? We had a better than expected PPI number, although 2-year yield is sticky and on the rise. That is challenging to the Russell long position, right? So jobs market data, however, coming in decently healthy relative to expectations, right? I know people will say, oh, the jobs market looks terrible, et cetera. Well, the jobs market has been in a downward funk for a long time. For multiple years, the jobs market has been contracting. Or not contracting, I should say, but slowing, just relaxing a lot. Like we're not seeing huge hiring, we're not seeing huge firing, we're seeing somewhere in the middle. So recently, though, jobs data has picked up slightly. And that's positive, right? That's a positive development when we look at NFP coming in at 178 versus 65 expected, unemployment rate coming in 4.3 versus 4.4% expected. Those are strong economic reads. And so, I look at something like the Russell 2000, I look at the S&P 500, et cetera. And I look at these things, I say, well, from a macro perspective, again, here's our score, +2 for fundamentals, +3 for COT and sentiment, technicals +4. I largely agree with that reading. And so I'm kind of a buyer of dips if we see them in the US indices. Now, of course, they are just off to the races here. So I can't really justify chasing at these levels. But if we were to get healthy pullbacks on things like the Nasdaq, on things like the Russell, I'm probably a buyer. And it's because I have more conviction. Whereas when I look at gold, as we just discussed, if I don't have conviction in all areas, I'm not going to put my hard-earned money on the line in the markets unless I have something there that really tells me I'm stacking odds in my favor to the best of my ability and to my knowledge, right? I want to have that synergy if I'm going to put on risk in my account. At the end of the day, you have to be thinking about this. Every time you take a trade, you're putting your account at risk. Is that risk that you are putting your account on worth the potential reward in the case that you're right? And so while I do like the macro, while I do like the the conviction that EdgeFinder has got on indices, and it's been, bullish for a few weeks. I am a little bit frustrated that I missed this rally, to be completely candid with you, right? Pretty much all of April, EdgeFinder's been bullish the Russell, been bullish the Nasdaq, been bullish the S&P 500. The challenge for me, though, has been just not been able to find any pullbacks. I've pretty much had only green charts here. So it's been a remarkable call, but I personally, in my own trading, have not been able to catch any pullbacks. I know there's people, and I'm kicking myself because hindsight is 2020. I wish I was trading the 1 hour, right? Because a lot of the 1 hour traders have been catching a lot of pullbacks, the very minor pullbacks that have taken place. They're still in there, and they've done really well on these. We've got a bunch of people in the Discord who have been, riding the index longs. And so again, I cheer them on. I love the long side. I just can't justify a good risk reward trade for myself. I hope that makes sense. I mean, this is a good example here, guys, of why EdgeFinder it's a remarkable screening software in the sense that it can map all this stuff out. But ultimately, for my own trading, right, I'm only going to pull the trigger if I can find a good technical setup that marries up nicely with what EdgeFinder is telling me. I consider what EdgeFinder is showing me, and then I bring it into my analysis and decide ultimately if I want to take trades. I have wanted to take trades, but have had a challenge in regards to putting them on, finding those entries. Anyways, the EdgeFinder itself has been very correct in the sense that it has flipped to more of a bullish perspective very early on in this move. And for what it's worth too, it's also been like super neutral gold and kept us completely on the sidelines of this sell-off in gold, which I think is fantastic. EdgeFinder is definitely doing its job. It is just kind of up to me as the trader to use that analysis, synergize with it, and find opportunities. A link was just dropped in the live stream chat. If you're looking to get access to EdgeFinder, now is the best time of the year. Give me a second to give you my sales pitch on this. So our team has worked on this thing for really 5 years, but it went public 4 years ago. We are celebrating our 4-year anniversary since launching this tool to the public. We have a team behind the scenes working to continuously improve this tool as well as the education surrounding this tool. If you are interested in taking advantage of that discount while it is live, by the way, I am still long copper. We'll talk about that in a second. If you're interested in taking advantage of the discount while it is available, there is a link in the live stream chat right now that if you click on, you can speak directly to our sales team who can set you up with our current best discounts of the entire year. And if needed, they're offering payment plans to split up the cost over a couple of months if that is easier for you. We do recognize that the dollar is expensive in certain parts of the world. And so this gives you a chance to still unlock the discounted prices and split them up if you need be. The other option is just to scan the QR code if that's easier for you. And that will take you to where you can explore the offer and take advantage of the sale before it ends. Hopefully you might be able to hear my cat. She's speaking a lot right now. I have 2 female cats and one big boy. He sleeps most of the day. The other 2 sleep a chunk of the day, but it's the big guy that sleeps all day long. Yeah. Hey, Nick, if we join the yearly plan, do we learn exactly the way you trade to become profitable? Do we have the whole strategy? Yeah. So, I mean, I share every detail about what I am doing in markets and why. If that's something that you're interested in, there's a stigma around the word signal service because it kind of implies like just copy what other people are doing, put no effort in. That's not what we offer. And I would not encourage anyone who is looking to just blind copy to join our service. But if you are interested in seeing the trades that I'm taking with full context, breakdowns, analysis, reasoning behind the trades, all of that, if that's something that you're interested in, then definitely consider joining because that is also 40% off for a limited time. Okay, sorry for all the promos. Take advantage if you want. Let's move on. Okay, so dollar index is also strengthening here. I dropped some takes on Kevin Warsh yesterday. And of course, because he was a nomination from the White House, there's controversy around his name. But when it comes to Kevin Warsh, I'm going to kind of stick to my thoughts here, which is I think that Kevin Warsh is getting, accused heavily of being a Trump puppet. I've seen that word thrown around. I personally don't agree with that. And it's not that I'm a big Trumpy by any means. It's simply that the guy has a history in the Fed. He played a role in the recovery after the 2008 financial crisis. He's a big fan of reducing the Fed's balance sheet, which I very much agree with. I think that is a good thing to do. And cutting interest rates, right? So people hear the cutting interest rates part and they're like, oh yeah, you're just doing what Trump wants. Well, reducing the Fed's balance sheet does not help the administration artificially. In fact, it's the opposite, right? The Fed increasing its balance sheet, buying bonds and mortgages, et cetera, it's direct stimulus into the stock market. In the COVID era, right, the stock market rebounded so violently because the Fed's money printer is what Kevin Warsh is kind of saying we shouldn't be doing that. The Fed shouldn't be intervening and printing so much money because, of course, it does cause inflation when the Fed does that. But it also disproportionately helps the wealthiest people. Why? Well, the wealth effect, stocks going up, who does that benefit the most? Does it help the lower incomes? No, because the lower incomes don't have nearly the exposure to stocks that upper incomes do. So I think, yeah, we should cut interest rates and we should reduce the Fed balance sheet. That way, it's sort of a checks and balances there. Lower interest rates are good for the average person and wealthy, but for everyone, right? Lower interest rates are good for people who need to, take advantage of lower interest rates on their credit card bills, or, maybe they want to buy a new car. Whereas pumping the stock market full of liquidity through the Fed's balance sheet really disproportionately helps the upper end. So I think we should cut interest rates, but I only think we should be able to cut interest rates if the Fed kind of reduces its balance sheet, which it had been doing for a period of time. But expanding the money supply constantly is it's a dangerous game because it's national debt just being printed into the existence. But we'll see. We'll see how it all plays out. I think he's a decent pick, so that's my take on it. And I'm not trying to be political in any way. I just think that from the perspective of a decently responsible Fed chair, I think that he will play that role. Anyways, and he has to, right? It's a committee. So it's a democracy in the sense that he can't just do whatever he wants. There's a committee that will veto him essentially if he makes moves that they don't agree with or think is wrong in the economics community. He's, I think, an economist first, and loyal to the Fed mostly. That's my take. We'll see. Maybe I'm wrong. Time will prove me wrong if I am so. Anyways, let's see what else we have here to talk about. Oil jumped up this morning, has faded off here a little bit, right? You've had a big pop in oil. My thought process on oil, I'm still going to be a little neutral. Let's talk about this copper trade. So I am still long copper. Taking some heat today. We went long here. Let me see. Okay, so I went long copper 2 days ago, and I was able to catch a really solid entry here. We briefly retested this prior high, broke through it, retested into that area. I was able to get a long entry with a stop below. Price shot in my favor, but of course we've given back some of those gains, but we're bouncing intraday. And I like this price action because if we take it down a notch to like the 4-hour chart, what are we seeing happening here? Well, we can actually kind of do a little bit of a markup just on the 4-hour chart for a second and kind of highlight the idea that we've found some support in this area. And if we're going to put in sort of a higher low here and break through those highs, right? If you see this sort of price action, that's the sort of trade that I'm looking for. Someone in the Discord today mentioned that they were frustrated that they had given back a lot of their gains on copper. But remember, I mean, this to each their own. You trade however you want to trade. But for me, like we keep rolling with it, right? Because at the end of the day, what I am shooting for when I take a trade with this strategy, the macro momentum approach that I have, I'm not looking for this move, right? That's great that happened, but that's not what I look for in terms of the type of trade that I'm looking for. What I am truly looking for is the trade that goes and keeps going. If it doesn't happen and we roll over, whatever, next trade. I'm in search of that trade, and it can take me months to find it, but I will find it eventually, and that's how I make the majority of my gains in regards to this strategy. Again, you can't get overhyped. Like, let's say you take a trade. Let's say you get long copper or gold or whatever. You take a trade and it moves in your favor, right? You can't, I know psychologically it's a little painful when it moves back. I guess I've just been doing this for so long I don't care. Like, it's like, whatever. If it comes back, I've had my heart broken by a trade reversing so many times that it's sort of just like, I just know to expect. Like, I assume most of my trades are gonna kind of fizzle out and not do all that much. And that may sound depressing, or that may sound frustrating. And I guess maybe earlier in the days of my trading this strategy, that felt a little bit more pressing. But what I know, I've done this long enough, I guess I have the benefit of experience here, is that if I keep doing this, if I keep taking my macro plus momentum setups where I think there's a good bull case for copper, I could be right, I could be wrong. This one trade, it doesn't matter. I could be wrong in this, who cares? But I know that if I keep stepping up to the plate, keep swinging, I'm going to catch the home run eventually. And that's my style of trading with this. It's not for everybody because it's a low win rate. It's a lot of disappointment, but then every once in a while, that light at the end of the tunnel is the ginormous runner that may be this copper trade, but it may not. And if it's not, it's not. So some traders, they choose to take partials. They say, I can't handle that. I don't like the idea of, having a trade reverse on me. To each their own, right? Like the masterpiece on gold. Yeah, that one gold trade, like, again, that trade on gold, I caught this move in gold. It was the most incredible, risk reward trade. The thing was a monster runner. Granted, I can't have those every single trade. I'm just not able to predict that. Nobody is. So instead, I just keep swinging and eventually I'll catch another one. But for that one trade, how many did I have to take that were disappointers, that were heartbreaks? The answer is a lot, like a lot more than you think, like 20, 25, 30 trades in a row where not necessarily all of them were losers, but all of them were sort of like, whatever. Like, meaning, let's give this copper trade an example. Let's say I went long copper and this trade ultimately falls apart and we take a loss. All right, that's one in the books. Then let's say the next one, we actually break through and we do this and I trail the stop, right? And then what happens next? Boom, small win. Imagine 20 to 25 of those in a row where that's kind of disappointing, right? Most of the time I'm giving back gains. Most of the time it's frustrating. That's the tuition that I have to pay to catch those glorious monster social media, post type trades. And I tell you that transparently because, first of all, I appreciate my audience and I like to be as honest as I can about this stuff. When you see me posting about a trade that goes monstrous, just know, I'm telling you now, full transparency, I had to go through the mud in order to find that trade. And so that is my style of trading. It is not for everyone. But what I have found is that is one of the most consistent overall, like if you can sit through all the painful, like little losses, it's worth it to find that one big winner. If you have the right macro, if you have the right momentum, and you manage the trade accordingly and manage your risk for when those drawdowns hit, that sequence, there's no secrets to what I do, right? When I have all the stuff aligned, I take those trades, I keep showing up for them until I catch the big one. That's it. I maximize when I have the right play that goes and goes and goes, and I minimize the damage when I'm wrong. I hope that makes sense. The core to it, day in, day out. Someone asked me if I ever get bored doing this stuff every day. No, because I keep showing up. It is, to an extent, a very repeatable approach. I'm looking at EdgeFinder every single day. I'm marking up my charts. I'm looking for those breakout type runners that could take place, and I'm managing the trades that are going right or going wrong, right? Does that make sense? I mean, that is my strategy in a nutshell. I let winners run as much as they possibly can. I'm looking for macro to synergize with price. I'm trailing stops, letting that runner go as far as possible. But I do not claim to know everything about what's going to happen next in charts. I try and just follow trends because I'm trying not to predict things. I'm trying to react and follow. I'm reacting and following to macro. I'm reacting to following price. Do I repeat myself every single day on these streams? Absolutely. Will I repeat it like a madman for years to come? Hopefully, and God willing. Thank you guys for hanging out with me. Hey, don't forget our 40% off anniversary sales going on right now. And don't go anywhere, because in just a second, we have Miko Audu coming up. He is more of a technical trader. And I think that traders love having the diversity in regards to strategies that we talk about on this show. I'm excited because his content is a change up from my own. And I think that's great. That's the whole purpose of why we have all these wonderful traders coming on the streams, is to get a diversity of thought processes and approaches to markets. And while you may jive with my style, you may even more so on the technical side jive with Miko. He also has a strategy where he's a trend follower looking for winners to let them run. So maybe you can share a little bit of his take on that. Don't miss the sale. 40% off is happening right now on EdgeFinder and our VIP group. Up next, after this quick break, we have Miko Audu taking the stage. Stay tuned.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Okay guys, what is up? Hope everyone is doing well. Glad to be back. As always guys, I'll go through a bunch of different markets, some which I'm interested in, some which I'm not, and I will share the reasons why. And of course, if you guys are looking at any markets, want my opinion, or just want to share it in the chat, feel free to drop some messages and any particular time frames as well. More than happy to take a look. But coming into this week, I was very interested in Euro USD, and I still am. We've had some opportunities on Euro USD, especially on the intraday time frames. I've had a couple small losses this week. We've had some momentum over the past. Actually, let me go to a different chart. We've had some momentum over the past couple of weeks, and I was looking to see if I can find some small intraday opportunities to see if we can get a bit of a drift. And we've had more downside this week. USD's been a bit stronger. I think pound's probably the better pair to have actually traded this week, because pound's been a bit stronger than euro. But I had a opportunity over here as price came back, test that support. I bought here, did see some nice upside initially, but didn't really get going. I was targeting a push back to this high here. I did manage to partial out a little bit, but ultimately it was still a losing trade. And I did have another trade this morning around here as well. Didn't go to plan there. But I'm happy with both positions. The idea with Euro is that we've seen overall momentum from the buyers over the past couple of weeks. I'm looking to trade in that direction. Now, I know the bigger picture for Euro USD is very, very flat. I mean, if I go to the daily chart, we haven't really gone anywhere for a few months now, actually. I say a few months. Yeah, since June last year. So it's coming up to a year where the market is just basically flat. We've got our highs, we've got our lows, no kind of gain either direction. So if you are going to see momentum, you can't be too confident of continuation. And especially with the intraday trades I was taking, I was never really looking for like a big swing, back to highs per se. I was looking to see if we can get a bullish day or two out of that. And look, so far we haven't. So yeah, if Euro USD was to roll back over and come back to support, to be honest, I wouldn't be surprised. The market has been doing that for a while now, and we're just oscillating. I'm going to wait to see how deep this bearish move does go, whether it is, price kind of reversing, or whether we're going to consolidate some more, or momentum is going to pick up again. At the moment, I'm kind of just being a bit more neutral. If you take a look at the DXY, we're kind of hovering around the 50% of the larger range as well, which kind of makes sense too. So basically you've got the high of the range around here, you've got the low, and then you've got roughly the midpoint exactly in the in between the two levels, and price is just kind of testing that area, which is going to be the most ambiguous area. Typically in the range, the best places to operate are going to be the highs and the lows of the range. You know, if you're looking for breakouts, you're waiting for price to break out of those levels and look for momentum plays, or if you're looking for mean reversion, just looking to buy low and sell high, of course, you want to be operating at the extremes of the range. But in the middle is where you're going to get the most two-sided participation. It's not going to be clear if buyers are in control, not going to be clear if sellers are in control. And because of that, I will be very, very patient with any bias. Doesn't mean you can't drop to a lower time frame and look for some shorter term opportunities, because there are some. It's just I wouldn't be looking to hold those positions, for example, a few days into next week, because I don't really trust any direction right now. I mean, we've got some structure above us here. I wouldn't be surprised if we see the DXY drift towards that area, maybe see a bit of a reaction. That could be a nice short-term opportunity in the lower time frame. Would I be looking for this? Absolutely not. Doesn't mean price can't do that. It's just we don't really have much evidence to justify that type of trade. The only reason really, as a very technical trader, which where I would look for bigger trades and bigger risk reward plays, is simply when there's a lot of momentum and one-sidedness to a market. So for example, like gold last year, you're seeing a lot of momentum there. I would look for big risk reward plays. I normally trade a lot of Forex pairs, so that kind of momentum is rare. I mean, we have seen some nice opportunities on some of the yen pairs, but even then, you don't really see crystal clear trends. You know, you're gonna have times of consolidation as well, like we've had most of, well, at least the first half of 2025 as well. But since then, it has been pretty clean. So yeah, the bigger trades are definitely the ones we want to make sure we capture and make sure we take advantage of. But there's a time and place, and in the USD pairs, I'm not really seeing that big opportunity right now. Very, very flat markets. I mean, I'll take a look at a few more of the USD pairs. Pound USD, very, very flat as well. Basically the same situation as Euro, although pound was a little bit stronger this week, so it had a bit more of a bounce, but it has been a bit down as well. So again, you can see overall not really doing too much. I'm not going to try and predict any meaningful swing here for pound until price makes a move to one of those areas, and if we see a breakout, okay, we'll discuss that. Or if price rejects it, that could be interesting as well. But whilst we're in the middle, I'm going to keep an open mind with direction and kind of look more on the lower time frames for smaller, minute opportunities. For example, if I was dropped to an hour chart, there could have been some nice opportunities simply buying from support this week, which is essentially what I was doing on Euro, but not as successfully because Euro is a little bit weaker. So yeah, we've seen some bounces here for pound, and again, we're seeing another one at the moment as well. Again, we're not necessarily looking for this either. Again, we're being more conservative. I focus a lot on market conditions, and I kind of focus my trading to what the market conditions are rewarding at this moment in time. For example, if the market's trending aggressively, I want to be aggressively following that trend. If the market's quite choppy, which we are in for pound, well, I'm going to take my profits quicker, not going to trust direction, not going to trust momentum either, because at the moment it's not proven to be trusted. But what I am going to trust is support. What I'm going to trust is resistance, because in choppy market conditions, we're less inclined to break out, we're less inclined to break through levels. We're more likely going to respect those areas until, of course, we do eventually break out. But again, for pound, really nice test this afternoon. It looks like we're having another reaction as we did yesterday as well. So again, if you're looking for opportunities for pound, I'll be keeping all my attention at this support level. As long as it holds, that for me would be a smart place for a buy. And again, looking for opportunities, maybe on like a 15-minute chart there, just to maximize the opportunity, risk to reward. If I was entering in the hourly, probably might not be worth the time. But if I can find a nice acute entry in the 15, you can make some nice healthy returns there. So yeah, that's kind of the theme with the USD pairs, kind of just looking for Short-term opportunities, I mean, Aussie dollar, that's been in a nice range as well. So you can see the equal highs here, equal lows roughly, but overall you can see the market's pretty flat ranging too. So again, we're at an interesting area right now for Aussie dollar, because either price is going to break out and we can expect potentially another trend, maybe another move like we had here, or price is just going to roll over, momentum's going to die, and we're going to, you know, return back within the range, maybe to the opposing side as well. A good kind of reference point is always going to be the 50% of the range. That would naturally be the first target for me if I was trading this, and push back to the 50, and I'll look to book some profits there. And if momentum goes well, we can always leave the rest to run back to the opposing side. But yeah, Aussie dollar I think is an interesting setup. I would wait for probably a daily close below to confirm that this is actually another fake out and we're failing to see, you know, price breakout and continue. If we can get a successful daily close below, that for me just invites the shorts, and I would be looking at downside. And in terms of risk reward, this looks pretty appealing, I can't lie. So I'm liking what I'm seeing with Aussie dollar at the moment. Again, you can see the theme is short-term opportunities. Let me read through some chats. What's up, guys? Hope everyone's doing good. Hope everyone is well. Yes, we can take a look at New Zealand dollar as well. Okay, you took some partials on the GJ long. Yeah, GJ was a little bit messy yesterday, wasn't it? I mean, momentum was looking really good at the time of my stream when we were live yesterday. It was looking really, really good, and then yeah, it kind of just, I think I jinxed it. I said I might have jinxed it, and it looks like I have done that. I'll go through New Zealand dollar first, then we'll take a look at pound yen. But yeah, New Zealand dollar, another interesting one, another USD pair. Again, direction very ambiguous here right now. This is the daily chart. If I zoom out, you know, I could justify buys just as much as I can justify sells. And if I can do that, that just means I can't rely on direction to be a sufficient reason to take a trade. I can't say, okay, yeah, I'm taking this trade because I'm expecting the market to go down, when that isn't really a smart expectation. Of course, you could have other reasons, but purely from a technical basis, I wouldn't justify a direction-based trade. And what that means is I'll be focusing more on positioning, more on location. You know, where's a smart place to buy? Where's a smart place to sell? And as I said previously, if the market is sideways, the market's quite choppy, and the direction isn't clear, well, the smart place to buy and sell is going to be at the extreme, you know, at the edges of the choppiness. And on a daily chart, it's going to take a while for us to get there, but you know, anything around here is a smart place to buy, and anything around here is going to be a smart place to sell. Doesn't mean it'll be a successful trade, but you want to be positioned in those areas in a market which is moving as such. As to more of an intraday opportunity, again, I'll focus on the short term. I like the highs here. We've seen multiple rejections at this particular level. I think this was the high from last week. Yeah, Thursday, Friday, that's the high from last week. We gapped down, came back to retest the high, still rejected it. So that's clearly a resistance or focus. And because there's no kind of strength in the market from the buyers or sellers, I wouldn't necessarily expect to break out. If I can see price get there, reject well again, that for me is a smart play for some shorts, particularly if you can get some wicks piercing through as well and you can get a stop loss above them. So I like New Zealand dollar to the downside, but again, it's more of a short-term trade, you know, back to support. I wouldn't necessarily be looking to target these lows here, although that could happen, but I wouldn't be holding full size all the way down there. A lot of things can happen between where price is trading and that low. So yeah, just being a bit more conservative with the USD pairs, because we don't really have that dominance from any particular participant right now. So just keeping it simple, short the highs. If we start finding support and the market starts trading a bit more sideways on the lower time frames, you can pick some nice longs there too. But that level from last week's high would be a smart place for some shorts if we were to return there again. In terms of pound yen, so yeah, yesterday was looking really, really bullish. I remember Bashi mentioned he was long on that one, and at the time it was looking very good. It was on the 15-minute chart. It was looking very, very good. Momentum was flying. I believe we're trading right at the high, actually, funny enough. And it looks like since then it literally just turned around. Yeah, so I definitely did jinx that one. Apologies, but yeah, I mean, that's the thing with FX markets. I mean, despite the yen pairs, they've been trending very, very well for quite some time now. But the thing about FX, you always get deep pullbacks most of the time. So with FX, I'm never really looking for shallow pullbacks unless there's kind of like a unique situation, you know, something's very fundamentally driven. Then yeah, there might be some nice opportunities on more shallow pullbacks, but on average, deeper pullbacks are a theme in FX, and indices are kind of more associated with more shallow pullbacks, more consistency with trend, because that's the nature of the market itself. FX, not quite the same. But yeah, pound yen, we have seen relatively nice upsides, quite corrective, but we've been pretty consistent with the high lows. As I mentioned yesterday, I said as long as price doesn't break through this low, I still maintain that bullish bias. However, we have become quite corrective, so I would still be bullish, but I wouldn't be, I wouldn't be necessarily having this high as a hard TP anymore. I would say if we can get some buys back at support again, this would be a nice healthy place for a buy, even this low here. But as we start coming back into resistance, I'll be looking to take some profits off the table there, just to give myself a little bit of flexibility, because yeah, price could very much rally and go and take up the highs, absolutely. In fact, I still expect it to do that because the higher time frames still look comfortably bullish at the moment. But yeah, I wouldn't be surprised if we go through a bit of retracement. So that's me kind of trying to monetize the path of price and not necessarily an absolute destination. But yeah, pound yen looks still bullish, maybe a bit on the corrective side, not as much momentum as we had yesterday, but I still like support levels down here. And because it's quite corrective, I'll be looking at trying to get stop losses underneath this low, underneath this low, because I can imagine us chopping around and then maybe making that move later on. And of course we could of course move the opposite way, and that's why we have a stop loss in the first place. But yeah, pound yen, I'm still pretty bullish. I do think we can see more upside. Check, oh, news just came out. I'm so focused on pound yen. But yeah, to be honest, with the I'll go to Euro USD. With the PMI, to be honest, not so much focused on the PMI in terms of managing risk, yeah, but in terms of like direction, yeah, I do expect maybe an instant reaction, but in terms of the bigger picture, I'm more focused on the more significant news events. So PMI, as a very technical trader, I don't really pay attention too much to it. If I'm in a trade, especially intraday trade, then yeah, I would pay attention in terms of my stop loss. But if I'm not in a trade, I pretty much just would ignore it normally. But in terms of the price action, still looks relatively flat, not much of a reaction. Has it happened, or is it? Okay, yeah, it has happened. Yeah, so not much of a reaction. I can see the candles had a bit of a wick down, but not much. But in terms of euro, I'm still looking for some upside. Again, purely from technical reasons. I'm still looking at some upside. We're coming back to some structure on our left here and looking to see if we can get a bit of a bounce, maybe a drift back to this area. And that's the idea of the trade I had earlier today, to try and see if I can catch that move there. And I may still have another stab, but tomorrow. Today I'm going to give it a rest. I don't really see much of an opportunity right now to get long, but let's say if through the rest of today and maybe Asia tomorrow, price starts to move sideways, find support, I would be keeping an eye out for some longs there. If we can start to find some stability. If price keeps trending lower, then yeah, I wouldn't be looking for longs. But if we start to see some more horizontal price action coming London session tomorrow, I'll give it another stab if I get my requirements, of course, and then yeah, looking for another leg higher. But again, more kind of intraday. I would expect to be out of that trade by the end of the day if it's successful. Okay, so could go and take a look at the S&P that was requested earlier. I'll take a look at UJ as well. So yeah, the S&P 500 is still looking very, very bullish. I'm actually very focused on the Dow Jones, because that's not quite back at all-time highs yet. So I'm looking for opportunities there. This was a setup I was talking about on my stream yesterday. It's not a trade I took, but someone was looking for some ideas on the S&P, and I said as long as the market structure maintains, which was these higher lows here, you're kind of just looking for another pullback and then a long. Although this was quite volatile there, so that probably would have taken you out of the position. But nonetheless, the S&P is still very bullish, and I'll still be looking just to go with the flow, especially when the market has made all-time highs as aggressively as we've done. If you want to keep it very simple and safe, you could wait for a break of the high and look for opportunities on a pullback. As long as momentum is still looking healthy, that break and retest makes a lot of sense to me. In terms of intraday, it's a little bit more choppy here. I like the idea if we can push back to these lows, because then I can get some stops underneath the low here and essentially just kind of trade the range. So if we can get an entry here, I'm looking to target at least the midpoint and then the high. So I'm kind of doing two ideas there. I'm trading the range, but I'm also trading the higher time frame trend. I kind of got that wind in my sails. There's multiple ways to trade the same idea. We may not even get that pullback, so there's that. But yeah, in terms of a bias, I'll just be looking to stay in tune with that trend. Momentum's very strong. I don't see any reason to be looking for sales, even though we found a bit of resistance over the past couple of days. I wouldn't really entertain that. So yeah, very, very bullish there on the S&P. But like I said, I like the Dow Jones. I'll go take a look at dollar yen in a moment. But I like the Dow Jones because we're not yet at all-time highs. So I still do think there's opportunity here. I would imagine a lot of people participating in the S&P and the Nasdaq are kind of very happy with price action, because all their buys were previously underwater with all the pullbacks and the downside we've seen. But now it's back at all-time highs, they're back in the green again. US 30, I expect a lot of people to be, very, content with the recent recovery, but it's not quite at all-time highs yet. And I imagine a lot of people still holding out for that. So I do expect to see more upside for US 30 and kind of a bit of a catch-up to what the Nasdaq and the S&P are doing. So I like that opportunity I'm seeing on US 30. In terms of trade ideas, I'll be looking at maybe a retest of this area. The only thing I'm worried about is I don't think price might come to test that area. I think we're a bit too bullish to come and test that level. But nonetheless, if we don't get that, I'll keep an eye on the retest of this high. So if price can successfully break out of this, a similar range to what we're seeing on the S&P and similar to the Nasdaq as well, I like that as an opportunity too. But if we do have a deeper pullback for whatever reason, as long as we can show signs that price is respecting this, I think that's a great buy, and the risk reward makes sense as well. We're not at all-time highs yet, so there's that lagging opportunity to catch up on there. In terms of UJ, so we had a look at pound yen, another yen pair which is overly pretty bullish. Dollar yen not as much, because USD has been a bit weak ish for the past maybe 2-3 weeks, so the yen has found it a little bit harder to gain ground with the USD, but overall it is still very much a bullish market. Looking at the bigger picture here, I still do like further upside here for dollar yen. I'm still looking at a push back to the highs on our left here, 161, 162. So overall, I'm a big fan of the buys here for dollar yen, but in terms of actually trading it, that's where you have to be a bit sensible. Just because you're bullish doesn't mean jump in and take the trade, whenever, and put a stop loss wherever. There has to be some sensible decisions with that. So in terms of opportunity, keeping it very, very simple, buying off the low here, I think makes a lot of sense. Reason being, the market's already respected that support a couple of times, and we are pretty flat here. So it's not like the market's aggressively bullish and we're just going to run away here. What we could do, but the market is quite flat. So the chance of us getting a breakout here are quite low. And if the trend is going to continue, we'd expect that support to hold. We're not looking for guarantees here. We're just looking to place smart bets. And if we can come back and test 157.6, that would be a smart bet, provided we reject it and whatnot. And we can find an entry and a stop loss below it. So yeah, I like what I'm seeing there for USD JPY. If we don't get that, then I would be looking at the break and retest of this high. It's not as good of an opportunity, mainly because you're a lot closer to the high. Price can mess around a little bit and make the move there, but it's still a good opportunity nonetheless, because price again has paid a lot of attention to the same level. You can see it's been resistance a few times. It's a pretty neat range actually for dollar yen. So yeah, dollar yen very bullish, keeping it simple. Momentum looks really good on the higher time frames. Intraday is a little bit slower, but nonetheless, as long as we don't go and break this support level, I do think the buyers will eventually win the battle. So either we get the bigger retracement, buy lower, that way we can maximize our risk to reward for the same trade essentially, or we buy a little bit later on a breakout or break and retest. Either way, with a similar target, basically back to the same swing high, but of course you're entering a little bit higher. Maybe the risk reward is not as large, but the funny thing is, this could still trend a lot further than that level too, so it could still be a big trade too. But yeah, dollar yen, I think just keeping it very simple. If a market is trending well, 9 times out of 10 it makes sense just to follow that trend. Of course, maybe if it's giving you some red flags, like, okay, the trend's very, very exhausted, or we pushed very, very high and there's clear signs that the market's more likely to reverse, okay, fair enough, you might want to stay out of that one. But otherwise, if you're not seeing clear red flags, which I'm not seeing here for USD JPY, again, at least from a technical perspective, I would only be looking to buy here. Again, we don't need to be right on every trade, you don't need to take the best trade in the world. You're looking just to make educated bets on aligned markets. Dollar yen's clearly bullish overall. There's still highs to be tested. As long as we don't break out of this range here, yeah, I would be pretty bullish. And the thing is, even if we do break out the range, I wouldn't suddenly be bearish. I just wouldn't be bullish intraday. We could maybe see a more complex, larger pullback before maybe we turn bullish later on. So even if you do break out that range, I'll still be bullish on a higher time frame perspective, but I just wouldn't be jumping into some long straight away. I'll allow the market its time to breathe, maybe see what we do at these lows. If we break through these lows, okay, yeah, I would, again, not be bearish, but I wouldn't be bullish either at that point. So that's kind of my last barrier of defense for that bias. But yeah, dollar yen's super bullish, keeping it very simple. The yen is pretty much weak against every other currency. If we have a quick look across the board, again, mainly just looking at the higher time frame. So yen's still pretty bullish. CAD yen, very bullish there overall as well. You can pretty much go through all of them. So yeah, when you have correlation like that too, for me, it's a no-brainer. Again, doesn't guarantee anything, but it means you're making an educated trade. It means you're making a smart trade, and you do that enough times with a pretty good risk to reward, you put yourself in a great place to extract edge from the market. But yeah, in terms of my focus going into the rest of the week, like I said, US 30 looks pristine. In terms of the opportunity, I think the catch-up trade is very much there. So if I can get some pullbacks on US 30, I'm eyeing up that, whether we get the breakout of the high or pullback into structure, but a pushback to the all-time highs is basically what I'm looking for. And I'm still interested in some longs in Euro USD going into tomorrow, but I do need to see support being found there. If price keeps falling, I'm going to be very neutral and probably sit out for any trades tomorrow. But US 30, the trend looks strong. I'm pretty bullish here. But yeah, guys, we have come up to the end of my segment. I do appreciate each and every one of you listening to the stream. If you have found it useful, feel free to check out my channel. Nick and the team have dropped my link in the chat. If you want to check out some of my streams, feel free to go and investigate and check out. But thank you so much for having me back on the stream. I'll be back next week. Take care, guys. Have a good one.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free to join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hey, happy Thursday, ladies and gentlemen. It is Thursday, isn't it? It is. Hope everyone's well. And I hope you've had a profitable week so far. So, as for open positions, we're actually finally seeing a little bit of movement. New Zealand US dollar finally in a little bit of profit. Would you look at that? Happy days. I think maybe I can retire soon. No, I'm joking. But yeah, no, positive movements on New Zealand US dollar after multi-day consolidation and drawdown. The EdgeFinder is still giving New Zealand. Oh, actually, it's not. I've just realized it was there this morning. I swear it was. But it's actually fallen off. So that might be the signal actually to cut the trade in a little bit of profit and get out. But moving on, Aussie New Zealand, what a monster trade so far. So we've got I've got three entries. Obviously entry 1, entry 2, and entry 3 here. So we've got 3 positions running. Probably, if it continues to my target, which is 1.25, probably going to be the trade of the year, or my trade of the year, I should say. We had a pound Australian trade that was phenomenal. Normally with, in trading, you'll normally have 1 to maybe 3 trades in a year that you can remember, the ones that you can be quite proud of. This one is very likely to be that one, assuming obviously we don't just go straight to stop loss from here. But Aussie New Zealand is still getting this very bullish reading on the EdgeFinder. So fundamentally and technically, it's very healthy. So I'm very happy to continue with this one. As I've said multiple times, I'm a little bit cautious because it is very, very extended on higher timeframes. So weekly time frame, been hanging in this overbought zone on the RSI. Obviously, we've been in this 14-year range, so on and so on. Again, we've spoken about it multiple times, but yeah, there is a little bit of caution, but so far, so good. Swiss yen is not looking great, but it's also not looking too bad. We're just sort of slightly below entry. We did have a nice move initially, had a bit of a pullback, and now we're pretty much back to break even on this one. And Aussie Swiss is doing fine. No real updates on this one. So yeah, that's it. I'm still signing SSLN. This one is, as I've said, more of an investment, not really a swing trade or anything like that. Just accumulating some silver as it depreciates, looking for what I would consider the fair value over the next sort of 2 to 5 years potentially. But yeah, that is that. So Euro Pound is actually my focus right now, and I'll move on to that in a second. Sluggy Bashi, I can't pronounce your name, so I'm not going to bother. I don't want to be offensive. S2288. Hello to you as well. Imagine trying to short it. I think there was a few people trying to short Aussie New Zealand. James Goodwin, I have to say, I still think it's chasing, but still think it's chasing, but this one give me wrong. I wouldn't say it's chasing. Trend is there, fundamentals are there. The market's moving. Tatienda, good stuff. Are you in New Zealand dollar as well, I would assume? You've been asking me about that one for the past couple of days, so I assume you're in shorts as well. Euro dollar looks good. I'll move on to Euro pound in a second then. Euro dollar looks interesting here. I would imagine we would come down lower to correct some of this candle here. On the other hand, I'm a little bit cautious of this market right now. Coming into our 200 moving average, RSI is a little bit oversold. So I think overall shorts make sense, but I think what would be the most sensible approach here would be waiting. So if you were looking to be a short seller, I would be looking to short on a pullback. So in this case, if we could see a pullback towards or into our fib zone here, it would line up with some previous structure to the left. It would be a really nice sort of break and retest of the lows over here. I think shorting right now is a little bit either too early or too late, depending on how you look at it. You are in New Zealand shorts. Very nice. Good stuff. So yeah, Euro Pound. I was looking at this one. I've actually got a video coming out about Euro Pound. More, not necessarily the trade idea itself, but more going over sort of the quick identification using the EdgeFinder. It should be out later today. So if you subscribe to my channel, you'll see that one. But yeah, Euro Pound's looking really nice. So it's not quite there yet. And this is where being able to just sit on your hands for a little while obviously becomes a huge benefit. So the weekly time frame is bullish. The monthly time frame is also bullish, so not fantastic for us. However, if we go to the daily, we've got a complete failure to hold above our 200 daily moving average. Quite a nice rejection to the downside. And obviously this is a break below our 200 moving average on the daily, which is a nice confluence. It just tells us a little bit more about the sentiment. Normally with 200 moving averages on the daily, if it's held, buyers generally will bounce off that level. If it breaks, generally sellers will continue lower. Of course, that's not a hard rule, but it is a way to sort of just use it as a bit of a sentiment indicator. From there, what we have on the H4 here, we technically have a bullish trend because the 200 moving average is below our 50. However, we're now seeing this sort of dip. And when we see this dip, it can be a little bit of a sign that we might get this moving average cross. And that just tells us that the trend is changing and is now bearish. So I'm looking for the moving average cross. I'm looking for also a pullback into this fib zone. So that would line up with previous structure over here. As I say, break, retest into value and continuation lower. It would also allow these moving averages a bit of time to cross. RSI here is a little bit oversold, indicating this could potentially be the bottom before we have the next pullback. So yeah, overall, I think it's looking pretty solid. On top of that, we do have the EdgeFinder that's reading bearish. There's a few more things. There's a little bit of COT confluence there as well. And we've got a little bit of a central bank potential divergence as well, which I'll show you here. Interest rate data and the projections. So obviously, given the current geopolitical landscape with oil, this may be delayed or it may be sped up. It really depends on what happens from here. But just from face value, it looks quite good. So obviously, we have higher rates by the Bank of England here. However, if we look beyond what the current rates are and we look at what the policy is going to become, we can see that the Bank of England is expected or projected to cut their rates while the ECB is expected to hike. So this part here would give us quite a nice divergence to trade from. So although, yes, again, the rates are higher within the Bank of England, the policy is really what I'm looking for, the divergence between the two. So I do think that there is potential and there's quite nice potential, but again, it's more of just a wait and see type trade. There's nothing to do just yet, but maybe within the next week, there could be quite a nice short lining up for us. Dollar CAD. Ugly charts. What dollar CAD's an ugly chart, Sluggy? Or do you mean my chart colors? Okay, so dollar CAD, let's just see. We've looked at this one a few times this week or over the past couple of days, but I just don't see anything. I'm just thinking now there might be more of a bullish case than bearish, and this is not set in stone. So I personally wouldn't be taking any setups here, but if I had to, I would say bulls make more sense buys make more sense than sells. And the reason is because we've got this 50 moving average on the monthly that has been clearly acting as dynamic support over the past couple of years. If we go to the weekly, we are coming into this weekly level of support, or we actually have now come into this weekly level of support and the weekly 200 moving average. We're seeing a little bit of a rejection here. So if we could see buyers fully step in and maybe cause a bullish weekly candle close on Friday, so tomorrow, whatever your criteria is, there is an idea there. The H4, though, is where the problems begin, because we've gone obviously from quite a strong bullish trend into now quite a strong bearish trend. So even if you did buy on the daily, you'd still be fighting this pretty nasty trend on the H4. When we look at the dollar, I'm quite optimistic with the dollar. I think we can potentially get the dollar to come up. I'm saying we can get it. Obviously, we can't do anything. But I think the dollar has potential to come up to around 105 to 107 within that range. And that would just correct some of this left side over here. So if we could see those things line up, that would be quite good. But then if we could also get some sort of resolution with the Strait of Hormuz, could see, or likely we'll see oil get pressured to the downside. Also in, the Canadian dollar would see the same sort of effect. And that could be a little bit of a boost here for dollar CAD to go to the upside. Having said that, the bit of nuance there is obviously if we do get that situation where we get the de-escalation, the dollar is also going to lose some of its war premium. So realistically, I think this is more weak currency versus weak currency. Obviously, again, if we get de-escalations, I think there's better opportunities and better places to allocate capital rather than dollar CAD right now. You love the sell idea. You're not going to try and counter trade me here, Max. I'm only joking. Yeah, it does look quite nice. I think Euro Pound is actually one of my highest probability trade ideas at the moment. There isn't really anything else I'm paying attention to. I actually need to redo my watch list over the weekend because he might be a bit outdated now. But yeah, I mean, Bitcoin looks quite nice as well. I wouldn't mind being a buyer of Bitcoin, but it's just not something that I really trade, so I'm going to stay away from it. New Zealand yen, let's see. Let's go back to top setups. So yeah, New Zealand yen is still getting this bearish reading. So yesterday I was explaining how, and Nick actually quite frequently says the EdgeFinder isn't a timing tool, which it's not really. But in a case like this, in very sort of specific situations, it can kind of be used like that. So I really don't like the idea of being a short seller on New Zealand yen. But because the EdgeFinder is bearish, I can't go in for a long position because it breaks my trading process. So in this case, it can be used as a timing tool because you can wait for that bearish play to play out and basically just stay away. Once you see something to signal you in, whether it is the EdgeFinder flipping back to neutral or bullish or whatever, then it can be used, you can use that dip to be a buyer. Does that make sense? So you're basically just waiting for the EdgeFinder to get out of bearish, let the market have its dip or whatever it's going to do. Then once the EdgeFinder flips back, then you can look for that entry. That's kind of the plan that I'm going with at the moment. But to be honest, I'm not that bothered about New Zealand yen. Gold, I've got nothing because, this is just a horrible sideways range. There is really nothing to do here. Moving averages are pretty much train tracked. So yeah, it's a case of just staying away from gold, in my opinion, and waiting for something to happen. Either yields come down and we can start seeing gold come to the upside, or we see escalations, yields continue higher, and we can look for potential shorts on gold. But yeah, that's it. You're already in pound CAD. I was long pound CAD. In fact, I don't think I told you guys or gave you an update on the pound CAD. But yeah, we were long. So I sent a long signal somewhere around here. It got stopped out. However, I kept my position open as a DCA approach because I had quite a small trade. So I managed to bring my average price down to around here. I closed it pretty much here because my exit criteria was if we closed below the daily 200, which we did do. So I had to get out, which is fine because it just wasn't showing really anything. I mean, let's get rid of that now. So the problem I've got, and this is again talking about how the 200 moving average can be used as sort of a sentiment indicator or just a guide on what market participants are thinking. Obviously, roughly, but it can help. This 200 moving average has been used as dynamic support over and over again, but we're failing to create new lows. So to me, this is too much indecision. There is nothing to do here. So if you were looking to be a buyer, I think waiting for a break of this range and maybe a retest of either the highs or the 200 moving average, then obviously looking for that continuation. That's kind of all I could sort of do right now. Problem with JPY is they can't hike rates. They can't hike right away like other economy. Yeah, I think we spoke about that yesterday. Euro pound. If you rewind the stream maybe 2 minutes, you'll see me talking about Euro pound. It's my number one idea right now. Yeah, I don't think the yen is really going to do much other than depreciate. It can, yes, be bolstered a little bit by a hike, but even then, I don't think it's going to change the narrative of dollar yen, Aussie yen, so on and so on. Even interventions temporary fix for a longer term problem. It doesn't, it pretty simple. Just look to sell yen really on dips and buy things like dollar yen. So yeah, Swiss yen is kind of an example of that. Now we're having a little bit of upside here, but unfortunately I've missed pretty much, in fact I have missed all of this upside. But yeah, the plan now is really just to look to buy dips and keep it very simple and straightforward. So I'm just looking at New Zealand dollar now because, as I said, it's fallen off the edge. Oops, hold on. Because it's fallen off the EdgeFinder and the daily trend just isn't really there. I mean, look at these moving averages. This is how I determine whether I want to be in a trade or not, really, is the moving averages and how they're formed in relation to the price. Right now, I'm just not seeing what I need to. And the bearish reading that we had in the EdgeFinder is no longer there. So I think what I'm going to do after this stream is just cut this position, take whatever profit this is, barely anything, probably call it just break even, and then maybe re-enter whenever the trend starts to develop a little bit further. I do like it, but I just don't, again, the criteria or the excuse me, let's just call it a checklist for the way that I trade. There's just not really much there though. Like now we've got, again, no longer a reading on the EdgeFinder. The daily trend is choppy and messy. The H4 really isn't delivering too much. The only thing that we really have is the weekly trend, the monthly trend, and the fib. And we're stuck in this daily range. So yeah, I just can't really justify this position anymore. How's my stream? Not good. I've had an absolutely awful week. Yeah, really bad week on New York sessions, but it is what it is. Luckily, I'm only trading prop firm accounts, so to be honest, it's totally meaningless in terms of P&L. I'm long pound card on the daily. It looks attractive. Oops, GP card. Let's take another look. I suppose there is an argument for it, but I don't know. I'm just seeing what we've got here. So yeah, there's not really any valid fib level. I mean, you could really try and force it and put fib here, but I don't like that. So it would either be here or here. Both situations, we haven't met the fib level. We're not seeing a trend. It's kind of similar to what I was talking about New Zealand US dollar. There's not really an established trend with our EMAs. And the EdgeFinder, yeah, there's no longer a bullish reading on the EdgeFinder for pound CAD either. There was previously, but it's disappeared. So I think it really is just a case of waiting on this market or staying away. Market's been weird. Yeah, I mean, the way I trade the New York sessions is very simple. I just wait for, I basically just draw up basic support and resistance in the pre-market, wait for the market open to break one of those levels, and I try to benefit from the volatility momentum. But it's just not really done anything this week. It's, on the open, we'll break one way, then completely flip back the other way, and then we'll reverse, and it's just been horrible. So yeah, this week hasn't played out, but it's okay. Anyway, what else do we have? I don't think there's much really on my list. Aussie Swiss we're already in. Pound New Zealand, maybe. Let's have a look there. Let's do a top-down approach. Monthly doesn't really tell me too much. Pretty nice sort of whatever you'd want to call it. Move to the upside, but break above the 200 monthly moving average. Yeah, I mean, the monthly is not really giving me much at all. I'm not going to try and overanalyze that. The weekly is quite nice and bullish. 50 weekly moving average is kind of acting as a bit of dynamic support, not too much though. Daily, really nice bounce here off our daily 200 moving average. I quite like that. That might be a signal to maybe be involved. Let's see. Bounce off our 50 and the 200, quite like that. So daily's looking quite nice. H4 is a little bit of an issue just because we've got, again, these sort of converging moving averages here. We're coming into this previous high and showing a bit of rejection on the H4. Daily wise, looks really good. H4 is very ugly, to be honest. So maybe what we could do here is something along these lines. So relatively tight stop just below this 61.8 and just below this low. Take profit could maybe be at these highs. The problem here is that the R&R is pretty flat. I mean, you'd be 1 point or a 1 to 1 or 1 to 1.5. Sorry, it might be worth it, but not fantastic in my opinion. Elvis, you got your fib from 1.83. What market, Elvis? I'm not sure what you're referring to. Did I go over gold and silver and how the US look for all the data and the Fed dude? No, I didn't go over all of that, Bashi. So yeah, when it comes to gold, there is nothing. A very flat market, nothing to do, no trend. There's not really any fundamentals there. It's no EdgeFinder reading. I've got no care for gold whatsoever. As for silver, I'm going in basically by proxy of SSLN, which is the equivalent of SLV for American traders. It's just priced in sterling. So I'm looking at, well, I am accumulating this market or accumulating silver as it goes down. But yeah, not really any short-term ideas or any swing trade ideas on gold or silver. As for the Fed, Warsh, I don't really have much of an opinion. He seems okay. I've got, no personal opinion. I did watch the questions by the senators, but it didn't reinforce my opinions in either way. I think he should, in theory, do a fine job. There was no glaring red flags, no massive green flags. There was no sort of directional bias on the dollar. It was pretty neutral. He sounded like he was reinforcing Fed independence, which was good, but yeah, I didn't really take too much away from it. Actually, let me just quickly check time. Okay, so Alan's coming on in about 8 minutes, so we've still got a couple of minutes to spare. Sluggy, you're looking for continuation on what exactly? Pound CAD. Elvis, we've covered Pound CAD as well. Oh, sorry, you were talking about Pound CAD. My bad. Let's go back. So you got your fib from... Oh, I've lost the message. Anyway, whatever. If you're long, fine. I think there's potential, but again, it's not really anything there for me. Dollar Swiss. Yeah, I don't think I'd want to be involved in this market either, to be honest. Monthly is very bearish. Weekly's bearish. What's the daily doing? Daily's also bearish. H4 actually is flipped bearish. So actually, maybe, yes, maybe shorts are the move here, just going off trends. So all time frames or all higher time frames are bearish. Dollar seems to be struggling right now. So there might be a short-term idea for a short on dollar Swiss here. So if I was looking to be a seller, you've got two options. You could either have a really tight stop loss. This would allow for obviously these previous highs and also the 200 moving average. Or if you want to be really conservative, you could go here just at this previous high. Really depends. In this case, I think if I was to trade it, I would go here. And the reason is because there's no EdgeFinder reading. I'm not necessarily optimistic that the dollar is super bearish right now. Take profits at the lows. That's kind of how I would approach it. But again, I don't want to give you a false sense of security or anything that, I got no interest. I'm not taking this trade. Sentiment unsettled today. What do you mean, Tony? Hold on, I think I'm missing something here. Sluggy, what are you talking about? Percentage? Nice fundamental divergence with Euro and Aussie. Yeah, I mean, the Australian dollar's been the choice for basically the whole of 2026. It was very straightforward. I don't think there was really anything you could have got wrong. It was a case of just buy the Australian dollar and you would have made money. So there is that. And to be honest, yeah, as you said, Sluggy, the fundamentals still do favor the Australian dollar. But when it comes to placing new positions, I'm just a little bit worried that it's going to take less and less to reverse these markets. So it's kind of like a stock. It's like the stronger and the more valuable a stock gets, the less it takes to bring it into sort of a pullback, correction, mean reversion, whatever you want to call it. It takes much less to bring it back down. And I think that's kind of the territory we're getting in now with the Australian dollar, because it's been so strong for such a long period of time, and it is still strong. All it's really going to take is another currency to start rivaling that dominance, and we could see quite large pullbacks. Potentially, again, we'll see, but I'm not really in favor of selling Euro Aussie or Pound Aussie just here. Have we got sights into any stocks? No, I don't really know anything about stocks. I do have a subscription actually to a service that helps me with stocks, but no, I don't want to sit here and start talking about individual stocks and things, because I'm just not informed enough. I don't want to say, this stock looks good or whatever, and then someone goes and buys it and it doesn't work out because I don't know what I'm talking about. I think that'd just be irresponsible. So I like to stick to what I know. And if there's something that I want to talk about that I'm not fully aware of or not fully experienced in, I try to make it very explicit. You wanted to buy airlines. That is actually not too bad. There was also Rolls-Royce, which, again, I will clarify. I'm not very knowledgeable in stocks, but I know Rolls-Royce has had a really difficult period due to fuel shortage concerns. I don't mind this idea. I was watching this, but that then feeds back into my other idea that I was speaking about yesterday with the financial market crisis potential. So yeah, I'm finding it quite tricky at the moment, because there are some things I would quite like to be a buyer of, but then my longer term bias is flashing red flags or flashing red lights to maybe just stay away for a little bit, which is what I'm going to do. I'd rather take it slow and steady and cautious rather than trying to buy all the dips on the current stock market, or sorry, buy all the dips on the current stocks. And then in 6 months time, my thesis plays out and we get 20, 30, 50% corrections in the stock markets. But yeah, saw a publication this morning saying that a lot of the UK airlines are having discussions with the government to help them, because they're really, really concerned about their supply, because there's fears with, I think it's all the major airlines are having really big concerns. So it could be an idea to start picking them up, but I think I'll wait just a little bit and see what happens. Okay, so what else do we have? Let's have a quick look at Bitcoin before I head off and let Alan come and take over. I do still quite like Bitcoin, but what we were talking about yesterday was these levels here. Oops. These levels that could act as a bit of resistance. So yes, we've bounced off this 200 weekly moving average and used previous structure as support. I quite like it. And we had the RSI oversold on this weekly time frame. My only concern is that the situation that we've got isn't necessarily over. And if we are going to see a potentially massive risk off move, because Bitcoin quite closely follows the Nasdaq, which is quite closely correlated, I'm not 100% sure, but I know that I've heard that before, I think actually from Nick. If we are going to see these larger corrections on things like the Nasdaq, the S&P, the Russell, and so on, it could be quite a large drag on Bitcoin. So I'm just a bit worried that these might act as more of a pullback and a sort of a correction of this moving of this RSI, rather than it being, oh, we're going to rock it from here. It could be more of like a sort of break and retest type approach, but we'll see. I'm Bitcoin's not my thing. Maybe I'm completely misinformed, but that is just a concern I've got, especially with the daily still quite bearish. I'm fairly sure the H4's actually looking okay, but yeah, I'd rather be overly cautious than overly optimistic at the moment. Let's just see. Copper, I do quite like. I mean, we spoke about copper. I do still like it, but it's just not giving me anything here. So we do have a bullish reading on the EdgeFinder. So in that case, I would need to see the break and a retest to continue higher, or I need to see a pullback into the fib zone here. At the moment, we're just stuck in this, consolidation at previous highs. It's not a level I want to be a buyer of just yet. Excuse me. Let's do a final check on open positions before I call it a day. Yeah, New Zealand dollar is pulling back now to entry. So I think, well, not I think, I'm going to just cut this one after the stream. Aussie New Zealand's doing fine. The Swiss yen's coming back, which is nice, and Aussie Swiss is also doing completely fine. So all I'm going to do is cut New Zealand dollar, and that will be it. Guys, I'm going to head off. Have a fantastic rest of your days. I'll see you all tomorrow. Don't go anywhere. You've got Alan Perez coming to take over the show.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Hope everyone's having a fantastic morning and afternoon. Good to see you, Bashi, in the chat. I haven't seen you in a while, my friend, so it's good to see you in there. Hope everyone having a lovely day here. Like always, if there's any chart markups, anything that you guys want me to go over, feel free to drop that into the chat, and I will do my absolute best to deliver on that. But let's go ahead and talk about what's happening here this morning. We did have some information coming out for the UK and actually UK, US, and Eurozone there. When it comes to the Eurozone, you did have composite PMIs come in at 48.6 versus expected, which was 50.1, which that is a contraction for the first time since late 2024 there. Services PMI as well for the Eurozone came in at 47.4. They were expected to come in below 50, but there was a little bit of a massive miss there. So that's going to be the worst reading since the pandemic lockdowns in 2024. So right there went ahead and hurt the Eurozone a little bit there. You are getting a little bit of a pullback, which I like to see here. Big reason for that is because I'm looking to go ahead and participate in either Euro US dollar short, which that's not on the EdgeFinder as of now, or a Euro pound. That's going to be like one of the assets that I'm looking to trade to the downside there. When it comes to the UK, they had a little bit of a beat there when it comes to their PMIs. So it's holding up some ground there. And that's why I kind of like the idea of Euro pound short, which is good. So we'll see how that plays out. As far as pullback levels that I'm interested in for Euro dollar, I'm just going to measure this out here with a fib, and I already have my alert set there. But if I were to look at something like this here for Euro dollar, anywhere at 38.2, I think that's good grounds for me to short that. Now, obviously, this idea here is contingent on a Euro US dollar bearish reading here on the EdgeFinder. So we're not seeing that quite yet. However, we did see some okay numbers here for the US as far as RPMIs goes. So I do like to see that. Hopefully this thing starts to update here soon, and we can see that reading pop up there on the EdgeFinder. When it comes to Euro pound, again, I like the idea because the Eurozone economy seems to be becoming a little bit fragile there. So I want to get a pullback here. I'm going to measure out this recent leg here from the recent highs here to the lows. And I think 38.2 or the 50% retracement level would be good grounds for me to go ahead and short this. In fact, if I just put a random horizontal zone here, this 50% retracement level seems to be okay here. You can see that this was brief support here and now possibly turn resistance. So just waiting on a pullback there for Euro pound. I like that it's a bearish reading there on the EdgeFinder of -7. And I think that once the new data updates here shortly, I think the reading will get even stronger there. So that's kind of like one of the only strong opinionated directional bias calls that I can make right now when it comes to Forex. Dollar directional bias there, a little bit tricky. You are seeing a clean and obvious bounce of support here at $98. However, again, this is kind of tricky. I think a lot of this is due to the safe haven demand in the dollar. In my opinion, the dollar is probably one of the cleanest shirts in a dirty pile of laundry. So that's kind of how I'm kind of looking at it there. So obviously, we are meeting these importing moving averages, the 200-day and the 50-day moving average. So if we were to breach those, then potentially you do get a little bit of a pop in the dollar all the way to 99.5. And if we do get that, then, you can see here that I'm looking to position myself accordingly by going short the euro dollar. So kind of my idea there. Canada as well, if I'm mistaken here, did have some higher inflation numbers. So their PPI came in at a monster beat at 2.4 higher versus 0.4, which was the previous. So that is a big jump there. You would expect for dollar CAD to be way lower here, but it's actually not. So that's kind of, you're showing that the dollar strength there is kind of outweighing that headline there. So dollar CAD a little bit tricky to navigate, but it seems like Canada's fighting some elevated inflation. So, excuse me. Okay, Sluggy, good morning, man. What am I watching today? Euro dollar, euro pound, seeing if I can get some pullbacks on those pairs. S&P 500, yeah, I can definitely go over S&P 500. Can I cover platinum? Sure, I can do my best. Pound surprised me. My reaction was funny on my stream. That's good, man. What time does EdgeFinder update daily? They update continuously. So all the data sets, if you go here to data updates log, you can see how frequent certain things are being updated. So you can see here, like the latest update was 2 hours for US GDP, for retail sentiment, whatever. You can see all of the logs right here. So very, 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 very fast. It's just a matter of when the cycle continues or when the cycle resets, and it'll grab a new data point. But it's always looking for new data. So that's what I love about the EdgeFinder. How about EuroCAD? Yeah, EuroCAD could be another one too. The only thing with CAD right now is that I would expect it to be reacting stronger than what it is. However, because it had that strong inflation print. However, they're kind of flat on the day, so nothing too crazy there. So let's see EuroCAD. As far as a reading there, I guess I would short this pair. I mean, we were looking for buys previously, but the fundamentals are shifting a little bit. I probably wouldn't trade this. It's not the strongest divergence in economics and stuff like that. Let me look at the EdgeFinder as well to see if I have a pair there that I could look at. Yeah, EuroCAD doesn't seem to be anywhere on here, and this is me excluding neutral there, so it's probably a neutral reading, so I don't want to touch that. I think Euro Pound would probably be the better choice for myself, honestly. Okay, let's see. Euro Aussie, look, divergence now is, yeah, actually that's a good point. Euro Aussie, so Euro Aussie to the short side. I do like the Aussie basket as a whole for the long side there. So let's look at this pair here. I mean, this is a very, very strong momentum. This is a very, very strong trend here. So ideally right here would have been fantastic, 1.68, but I didn't get that. So seems like prices is pretty much moving there. I would argue, or I would say that this is probably going to be the playground that we operate in as far as for a range goes. So I would say maybe the target level for short players here for Euro Aussie would be 1.62. So we're pretty much we're more than halfway there, honestly. So I wouldn't really trade it unless you were to get a pullback into like right here into this moving average. Then perhaps I'll participate with that. So what I'll do is I'll put an alert there. That seems okay, but again, also not an EdgeFinder reading, so I'm not going to touch this trade. But it seems to be working out quite nicely, and there seems to be some good momentum there. Let's see here. Yeah, you might add that to your list as well. If you take Euro USD shorts, what could be your targets? A great question. So Euro USD here, again, the directional call on dollar is kind of tricky for me right now. So if I were to participate in the trade, I wouldn't be looking for a humongous swing trade. Honestly, if I were to do that, if I would get my ideal entry, it would be something like this. So I short within this fib level here. I put my stop above the 61.8, and then my profit target would be 66 pips to that 200-day moving average, or even to this level of support here. As you can see here, it is not a 2-to-1 risk to reward. It's like more to a 1.6. So not the strongest there, but however, as the trade goes on, and if it were to work out in my favor, I'll be looking to trim my stop as soon as possible. But the initial risk to reward is not the best, right? It's kind of like a 1-to-1. So, that would be a low risk trade, and my profit target would be kind of short there just because I'm a little bit conflicted with dollar directionness. Okay, so platinum, someone wanted to go ahead and for me to cover platinum. I'm not sure what the fundamentals look like for platinum. I don't see this on the EdgeFinder. Let me put neutrals on there. It's probably going to pop up. Platinum. Neutral reading. Yeah, I'm not a platinum trader, man, to be honest with you. What is that? PL futures? Yeah, PL. This is delayed data too, because I'm not subscribed to the exchange. The platinum, Oh, now that I'm looking at this chart, platinum looks a lot like silver, honestly. These look like very, very similar. Sorry. They look like very similar charts there. Not sure if the drivers are the same. Yeah, I wouldn't touch platinum, man. I wish I could give you some good feedback on platinum, but I am not a professional at platinum. I don't trade platinum. But it seems to look like a silver chart. And if it looks like a silver chart, then I would say don't trade it, because I don't like silver. I don't like silver as a swing trade. I don't like silver as a scalp. I don't like silver at all. Just looking at history there, and I can give you this quick lesson here, but you had the 80s, then you had 2011, and then you have now. And so you had these monster run-ups in silver here, and then you had a mean fade lower, and the forward-looking returns were very, very bad for silver. Same thing happened in 2011 era. Monster run-up here, then you had this crazy, crazy wick downward, a bearish close, and the forward-looking returns are, lackluster there. And I think that's going to be happening with silver as well. You had a crazy monster run-up here. This whole 12-month candle was a almost 200% candle to the upside, and now you're having this big wick here to the downside. And I would say that if you were to see this candle close red, then the forward-looking returns on silver will be very lackluster, and I don't like that. So I would stay away from silver. I know that was a very euphoric chart to participate in, a very euphoric chart to look at, but I wouldn't be trading silver at all. I would much rather something like gold, if anything. I think gold has a potential to make a comeback here. And I know a lot of you guys love gold, so I know you guys love to hear that. When it comes to the EdgeFinder score, if I were to go to the asset scorecard, well, never mind. So gold was a +4, which was borderline of a bullish reading, and now it seems to be neutral as well. So again, very, very tricky with gold. Gold's momentum to the upside would be contingent on lower yields, lower dollar, lower oil, central banks looking to cut rates. And so I don't think that's going to be the case. In fact, you have a couple central banks next week that are looking to make rate decisions. Eurozone is at 25% or 26% chance that they're going to hold rates. Or hike rates. I'm sorry. So I don't think they're gonna hike the rate. So ideally for me, if I were to position myself short euro dollar before that, I think that if Eurozone doesn't go ahead and hike the rates, that would be bearish for euro. And a lot of other central banks as well are looking to hold steady. Besides the RBA, RBA is a 75% chance that they're going to hike at the meeting next week. So that's kind of my theme there. So if you were to see central banks hiking rates or staying steady, then that's a bearish catalyst for gold. But if you were to see the opposite, again, if you were to see them looking to lower rates and move in that direction, then that's a positive catalyst for gold. But for now, it seems like it could be range bound, and I think that's good. I think that's a good thing as well. So if you were to see gold range bound and you find yourself at this level at 4,400, I've been saying this in the live stream, I think that's a good buy opportunity. This is solid support here. You can see that this was a resistance here back in October 2025, rejection, November 2025, rejection. We broke above, we retested this level in December 2025. We popped higher there. This big leg down, you can see here February of 2026. This year we popped up higher, and then this big leg down here, you can see we got into this level. We tested that 200-day moving average in March of this year, and we popped higher. So I think if we were to meet gold back at 4,400 to 4,200, I think that's a solid risk to reward where you can, place an entry here, put your stops below the 200-day, and then trade it to the upside. Obviously, if the central banks are looking to start easing again, and ideally there's a resolution to the Middle East around that time. So we'll go ahead and see how that plays out. Bitcoin, yeah, we can talk about Bitcoin here. It seems to be holding strong, holding up quite well despite what's going on in the Middle East, and considering that this is a high-risk asset. So I like that, going for it. The EdgeFinder, I believe, has a bullish reading as well, which is very, very good. And you know what? If it wasn't for the EdgeFinder, I wouldn't be looking at Bitcoin. So I would really say this, guys, like if you guys are looking to trade this environment, it can be very tricky. Definitely get yourself a copy of the EdgeFinder, because it can definitely filter trades out for you that you might take. Like, for example, EuroCAD we were looking at here. We were bullish on EuroCAD earlier in the week, and now we are kind of like no longer bullish that pair. Bitcoin as well, something I would never look at. But now that, the EdgeFinder is kind of pointing me in that direction, I think that's a great find there. So definitely get yourself a copy of the EdgeFinder to kind of filter out the good trades and the bad trades, and take the best setup. So yeah, I think Bitcoin looks strong. I know Marco, my friend, just joined here. I know, Marco, you have a good setup or a good idea there on Bitcoin as well. Do you have any thoughts on that one?
Hello. Sorry, I was just browsing through the Discord server. Yeah, Bitcoin, absolutely favorite thing for me alongside stocks. So I think we have a bit of a break-even day, but I would like to get in around the 20 MA, maybe even around, let's say, this level of support. So around 70, I think 75 would be nice. It would coincide with the 20 MA. And we had the breakout higher, so we had a breakout out of this flat range. Are you looking to get in, or just talking about it because of the EdgeFinder reading?
Yeah, I wouldn't get in. I'm just talking about it. And it's kind of cool that despite me not trading Bitcoin, I can have a tool that tells me that it could be bullish. And filter out that trade for me, and then I can just watch that thing play out, which is what I really love about the EdgeFinder. Like, another thing too that has came on my radar, Marco, that I wasn't looking at here earlier was Euro Pound. I like Euro Pound. I saw that it's been a bearish reading on the EdgeFinder for some time now, and so I'm looking to go ahead and participate with that now, largely due to some updated fundamentals that we got last night for the Eurozone and the UK. So like the PMIs for Eurozone didn't come out that good. So composite and services both missed. I'm sorry. And they were the biggest misses for some time now. So versus the UK had some pretty okay numbers there. So when it comes to Euro Pound, that relationship is getting a little bit strong for that downside move. So I'm looking for kind of a pullback in Euro Pound. I think 38.2 or 50% retracement level would be ideal for me to go ahead and enter that trade.
Honestly, I'm bearish on the pound. So like for the long-term numbers, if I just open up the EdgeFinder, and also, by the way, before I do that, if you guys want to participate in the DNA Fund giveaway, I have this jot form and I'll post it in the comment section. So fill it out and I will do a giveaway a bit later. It's going to be a 10K one-phase account. What I wanted to show you, though, is we go to economic data, we go to GDP, and we find GBP. So pretty low in the latest prints and not improving. Then the next thing I would look at is the inflation. So I would look at the CPI, which I think is elevated. But again, most economies are elevated at the moment. Yeah, it is elevated. It's a problem. It's a definite problem and makes the Bank of England, puts the Bank of England in a tough position. And then also labor, unemployment. Let's bring that one up. So pretty high when you compare it to sort of other economies. But the main problem with it is that the unemployment is climbing. So the trend is going higher and higher. While with the euro, I think it's mostly staying flat, if I'm not mistaken. Yeah, kind of staying flat. So this is one way I use the EdgeFinder to get more of a longer term reading. And also what's interesting is when the war happened, the markets started to price in rate hikes for the Bank of England, which is pretty crazy because we were supposed to get rate cuts and their economy won't really benefit if they hike. I mean, the GDP is not great, the unemployment rate is climbing higher, and if you hike into that environment, it's definitely not going to help the British pound and their economy in the long term. So this is also one of the trades that I see people placing that are betting for a ceasefire. They're betting that the market pricing completely reverses. So essentially, when the war started, we started to price in rate hikes for the Bank of England. But if there's an actual de-escalation and if the war ends, well, they can cut again. And that will mean a big repricing in bond yields, I believe. So in the UK bond yields, I'm not sure what the name is, like gilts or something like that. Essentially, puts the Bank of England in a very, very tough spot at the moment, which means for me, I don't want to bet on pound strength.
Okay, super fair take. And I agree that in the longer term, right now, that when it comes to whether it be pound dollar or euro dollar, I think that right now it seems like I said this earlier, but the US dollar is probably the cleanest shirt in a dirty laundry pile. Um,
Okay.
what I like about euro pound though, and why I'm gonna kind of stick with this idea here is that it reacts a little bit differently to a pound dollar versus euro dollar. So
Mm-hmm.
alongside
Mm-hmm.
euro pound short, I would be looking to take euro dollar short as well. So euro versus the dollar. But what I like about euro pound here is that it seems to be trading, and this is like this for this pair particularly, it's very notorious for just trading range bound. And so if I were to get that pullback in euro pound, I think my target wouldn't be too far stretched out. I think longer
Okay.
term, it'll be very risky for me to make a directional call of like, we break this support here and then trade it all the way down to the downside. And you have like these very extreme take profit levels. Ideally, I'm just trying to participate here in something shorter term, as long as the EdgeFinder shows me that reading as well.
Mm-hmm.
So the
Mm-hmm.
profit
Mm-hmm.
target would be something like this here. So ideally, 50% retracement level, stops above the 200-day moving average, which is right here, and then take profit within this level of support, which that is only a 53 pip take profit there and a 20 pip stop loss. And that's the thing about this pair here particularly, is that it just trades so slow, but I'm okay with that. I just kind of want to be involved there. And with euro dollar, same idea as well. You have struggling growth, as we clearly see here with PMI data, the big miss there. So my take profit as well would be somewhat short term. So if I were to get a pullback here in euro dollar, same thing, stops around here. Take profit would be that 200-day moving average, another short-term play.
Mm-hmm.
It would be something like that as well. So I think that longer term, for sure, I think pound strength is a little bit capped, especially once you get to these upper limits here, because this is clear level of resistance here at this level. But I think for a short-term play here, I think that with a 50 pip take profit, I think euro pound is a good level here, especially if you start to see some continued numbers improving for the UK, because I honestly don't know what the numbers are going to be like for the UK. Like if they see some kind of improvement there, then obviously the divergence between the two gets a little bit stronger. Like tomorrow we do have UK retail sales, which is supposed to come in actually weaker than expected, right? So we'll see how that plays out, and maybe that can give me that pullback opportunity for euro pound. Retail sales month over month are going to come in a little bit better at 0% versus minus 0.4. So it's crazy how that sounds there. So we'll see. But I think short term, I like euro pound.
Well, definitely for a short-term play, the analysis that I just did doesn't matter much. It's like just one point in the calculation where you can say it's against the position. But again, for a short-term bet, just the recent data is the most important. EdgeFinder reading is neutral on Euro GBP, or is
It's
it
bearish minus
bearish?
7.
Cool. Okay, cool, nice. Yeah, I think for a short-term play, it makes sense. What's your take on the dollar, like on the long term? What do you think?
Yeah, man, that one's a little bit tricky. Honestly, it's a little bit tricky for the dollar. I want to say neutral to bullish.
Okay.
I want to say
Okay.
neutral to bullish as of now. We did have unemployment claims, I think, today, this morning. Let me verify that, which came in. It was a slight miss. But let's go to Eco Surprise. It's actually falling, man. I don't know. Dollar direction is kind of tricky here. A lot of it has to do as well with the new Fed regime change, right? How the market digests that and how they price that in. It's a little bit tricky, but it seems to be, like yesterday, US dollar was actually number 3 on this list, and now it's kind of like towards the middle to bottom there. So I think making a directional call on US dollar is a little bit tricky, and that's why like my time horizons here for my trades are going to be short term until I get a more cleaner outlook. How about you?
Yeah. I mean, for me, I thought about it yesterday, and if I just go through my little website here, out of all the central banks, the Fed is the only one that is on a path to cut. So this graph is essentially telling you hike or cut. And this is the only graph that's going lower. Like you have the ECB up, BOJ up, Bank of England up, Bank of Canada up, RBA up. So even during this sort of Middle East conflict, Fed is still looking to either stay neutral or maybe even cut. That's at least what the market is pricing in. So very long term, I'm talking about end of 2026. I have to be bearish. Maybe not even end of 2026. Maybe even like mid 2027, end of 2027. I have to be bearish. I think we break out bearish out of this flat range just because of the interest rates. And we know at the end of the day, interest rates are king, right?
The backbone.
Really, they should be the one they should be the one thing moving the markets. So we had the rally right there because of Trump getting elected. Then Trump got elected. Then we dropped because of the tariffs. Now we're flat, getting very little action, very little volatility on FX. But once we get another cycle of the central banks, I think we could see some downside and we could see some opportunities. So on the very sort of long-term horizon, I'm waiting for another cutting cycle from the Fed. Right now, they're staying flat. That's kind of the worst thing for currencies, for volatility in FX. If all of the central banks are flat, well, your biggest catalyst, your biggest market mover is non-existent. You have the data, yes, and you have the future projections, but if they are staying neutral and monitoring the situation, it's going to be flat. That's why I'm also a bit hesitant to place positions on the dollar right now, except, of course, UJ. I mean, UJ, that's a completely different ball game. That's based on the intervention. But on FX, being patient, and I think equities and Bitcoin is the play at the moment.
I definitely agree. It's definitely tricky, especially with like when we talk about the Fed here. Like you're right, the backbone of foreign exchange is interest rates, right, and yields and all that good stuff. And the Fed right now seems to be on hold until December of 2027, which is a long way away. However, this is not concrete. Like if this was concrete and this is what the market knew and that was going to be the idea, the framework until December 2027, that would be a lot easier to trade. What makes it so hard for me at the moment is that one day we can have no cuts until December 2027, and then tomorrow we can have a cut as soon as June of this year, which is so tricky as well. So I definitely agree as far as like making a directional call on the central banks and how they're looking to move forward for the long term. And like that's why my trades are only going to be euro pound and euro dollar short term. And like Bitcoin seems okay. Now I don't trade Bitcoin. Like my brokerage is Tasty FX, so I don't have the ability to trade Bitcoin or like the stock indexes. That's more for me. That's more like my regular traditional brokerage accounts. But as far as trading goes, I'm very short term, and I'm gonna try to play that euro dollar short and euro pound short.
That's what I wanted to mention. I mean, the thing that could work in the current market conditions is short-term plays. Just possibly some mean reversion like you're doing or watching the Euro GBP. Let me just bring it up here. So if we go to Euro GBP. So we have the flat range, the sort of the support and the resistance have been established. And if you can find an edge trading inside of the range or basically doing mean reversion, that could absolutely work with a very, very short-term focus, which means you can get out of the position in a couple of days and not stay in it. Because, again, you can get chopped up as well. If you try to place directional plays in such a choppy market, you're just going to take break-evens, losses, or maybe small wins, and the fees and the commissions will eat up your profits. That's something I'm seeing right now. For example, for the experiment I'm doing with trading using ChatGPT, basically it's giving out signals on gold. Every single day it gives me signals, but gold has been flat. Since, I would say, the 1st of April, we were just super flat. So every single day, if you take positions in this market, the fees and the commissions, it's going to ramp up. and you're going to be net a losing sort of trader in this market environment. So that's the only thing for me. The focus right now is not to lose the sort of the profits I made in March, let's say. That's why I'm a bit hesitant, and I'm waiting for a new catalyst essentially. And as you mentioned, the pricing of the Fed can flip like this. If we get a complete de-escalation, if we get peace in the Middle East, well, then we're back to cuts. And that's good. I mean, that's good not just for the world, but that's good for the markets, because the dollar can pick a direction. It can actually continue going lower.
Yeah, man, I definitely agree with you. One thing I would say here before I head out, guys, for one, join the Telegram channel. It is completely free value there. And it seems like, not only us, Marco, but everyone else is kind of flat. And I think the markets have a really good way of like getting what they want. And I mean, if we're flat and we're struggling, can you imagine the people that are out there like with bigger money to play with, and they're also kind of frustrated and stuff like that? Like, all I'm seeing right now is like either short-term trades or premium options and options premium, stuff like that.
Yeah, options. I think what Nick is doing at the moment is golden. I personally don't have the capital to do it, but I think that's the name of the game right now, is options and selling, covered calls, I think. Essentially betting that the price stays above a certain level, and if it goes below it, you just get assigned so you can hold it for the long term. I think that's an awesome play.
Yeah, just collecting premium. I think I think a lot of people are doing that, and I think the market has a really good way at like getting what it wants. And I think that the markets are desperately waiting for a new, like you've said before, like a new cycle, a new theme, right? And so I think when that becomes present, we're gonna have some opportunities for us here. Hopefully summertime.
One thing I want to mention: usually, every time I go on vacation, the markets start acting like crazy. So, like every time in the summer when I took a vacation, I was trading on the vacation because the markets were moving. And it's summertime, vacation time, so we shall see. Maybe we get some movement because of that.
One of my biggest horror stories, Mark, I'll say this very briefly. 2024, that August 5th sell-off. I was June and July, I was visiting Houston back home, and I was not present in the market. And I came back, and there was lots of volatility, and I made the mistake of not really understanding what was going on fundamentally, and I just got crushed. Day after day after day. That and again, summertime, that volatility kicks in, and I was on the wrong side of that. But all right, man, I'll leave you to it.
It goes both ways, but we can catch it. We're gonna catch it this time. So thank you, Alan. I'll see you tomorrow, and good luck in trading for today.
You too, man. Take it easy. Bye-bye.
Yep. Goodbye. I will post the link to the giveaway form one more time. So if you want to participate in the DNA funded giveaway, where is my link? Here. So it's a JOT form. Go to the comment section, fill it out, and you'll get entered into the giveaway. So it's a 10K one-phase account. By the way, if you want to get funded, the sponsor of today's live stream is DNA Funded. This is my personal 25K two-phase funded account. I'm down 2%, a bit more. I'm down around $700. So not liking the current market conditions, but it's part of the game. It's part of the game. I just have to go through it. And this challenge is purely traded by ChatGPT. So that is why I was mentioning ChatGPT keeps on taking trades inside of this range on gold, for example, and it keeps getting chopped out or chopped up. So I'm going to have to tweak it a bit to make it not take so many trades inside of a range bound market. But anyways, if you want to get funded with DNA, the code A1 Live gets you 25% off any DNA funded challenge. Okay, so the code is A1 Live. I've had a great experience so far. There's a big broker behind this company. They're using TradeLocker, which is, in my opinion, amazing software, and their support is pretty quick to respond and pretty pleasant as well. I had some back and forth with them because I had a payout, but a payout that got rejected, but that was according to the plan because I broke the consistency rule. So I just requested a small payout to reset my account, to reset my best day. If you go to the calendar, my best day was $988, and that is not ideal for the consistency rule, where you want to have your best day be around, I would say I'm aiming for $400, maybe 500. So I wanted to get this reset, requested the payout, got rejected, of course, because they broke the rule. And now the max daily win has been reset. So we're back to square one. As far as my watch list goes for today, I have the same thing. Not much has changed. I have the Nikkei, which actually went into all-time highs again. I'm looking for a pullback. Will we get it? Not sure. S&P looking pretty healthy there. So S&P continuing to grind higher. I have Aussie NZD. Whoa, that's a nice bounce on Aussie NZD. Take a look at the EdgeFinder top setups. I think it's still bullish. To be honest, I'm hesitant to enter Forex at the moment. Very bullish. That's definitely nice. But I'm hesitant to get into trades. I don't want to force positions. I think especially in Forex, the volatility is low. So yeah, I'm just sitting on my hands at the moment when it comes to FX. Bitcoin, I very much like. I would love to get a pullback to the 20 MA, looking for buy setups. If we have actually found the bottom, and there's no guarantee that this is the bottom, but I think the probabilities are this could be a bottom. So if we can pull back, if I can get in, I think we can go to 90 something, approach 100K. And if the price decides to go even higher, we could go into all-time highs. It would not be unheard of. We already had something similar in 2021. Okay, so see, sell off, and it was 50% as well from the peak to the trough, around 55%. And then we went back to all-time highs. So if we can get in right here, let's say, this was a nice entry, that would be great. That's what I'm waiting for on BTC. We already had the breakout out of the range. We got the confirmation that the bulls want to step in, which is the main point. Only thing I wouldn't like to see is this fly away without me. But does that mean I'm going to be chasing the highs? No, just going to wait for the next opportunity. UJ is on the watch list as well. We almost hit 160. Was pretty close. So we are now at 159.4. But we could very easily hit the 160 level. So I'll be alert. I'm not going to place a sell limit. I wouldn't really want to place a sell limit. But if the alert gets activated, I will most likely get in. If you're in the A1 Discord, you will be notified about it. The trade here is sell at 160, wait for a sell-off like the one on the 19th, like the one on the 8th of April, like the one on the 17th of April, then you take profit. Rinse and repeat until there is an actual intervention. So that's how my watch list looks like, or what my watch list looks like. Let's do the giveaway now. So let me copy all of the names. 23rd of April. So let's copy all of the entries. Go to the wheel. Post, spin. So it's a 10K one-phase account, just to remind you. Albert or Christian? It's going to be Christian. So Christian N, congrats on being the winner. I have your contact information. So after my segment ends, I will send you an email with the code. Okay, so congrats, Christian. Comments time. What do we have? Sluggy says even big GPT is suffering. Yeah, so we're in another drawdown. Let's see what happens. I'm interested. I'm making a YouTube series about it. So whatever happens, it's gonna be good for my channel because I get content out of this, or out of the whole challenge. Let's see. Sluggy says, Max, we have been donating in the New York session. It's been tough. It's been tough. It's crazy how GBP is holding up. GPUSD must drop already. I think I'll stop trading in the New York session. So much back and forth every day, pattern profit morning, give back afternoon. It's just a market condition. Like, the volatility has died down. Look at the currencies. Look at the DXY. It's flat. Ever since June, we were pretty flat. Yen, I mean, ever since 12th of March, nothing. Really nothing. You look at gold, flat. You look at silver, flat. You look at copper. Copper is actually moving. I know Nick is in a position here. I took his signal on my prop firm accounts. So I'm in this as well on some accounts. I think on FTMO. Actually, only on FTMO. So pretty good trade. EdgeFinder is bullish. Let me see. I take Nick's signals time to time because he has a pretty good edge. And it's pretty much in line with the EdgeFinder, so that's nice. Copper is the only one that's kind of moving. Other than that, the metals are slow. And of course, equities are moving, absolutely. So equities, pretty crazy ramp up higher. Just give me a pullback. Just give me a pullback. Don't explode up without me. So we shall see. We shall see what happens. But I'm focusing on the Nikkei. I think the Nikkei is a bit better. I think the Nikkei is a bit more high probability, and it has been beating the S&P consistently in the last 5 years, which tells you something. Surprisingly, Marco EuroCAD back to break even. We'll look to get out after today. Bad euro data. Okay, awesome that it's bounced back to break even. I'm glad to hear that. Look at the Nas. It's breaking again. Let's see. The Nas, let's see the Nasdaq. Nas, whoa, this looks really good. This looks really, really healthy. So Nasdaq, an absolute flyer. I think most of us are staying on the sidelines and saying, we want to pull back. We don't want to chase the highs. We want to pull back. Will it happen? We're going to have to wait and see. But even if we pull back to this level of support, I think it's still okay. Like 26.2, something like that. It's a good level. Or 262. Would coincide with the 20 MA, maybe. So hopefully it bleeds into the S&P. I'm not sure why the S&P is struggling while the Nas is bumping higher. One thing that I've read about is all of the investors that wanted to get in on the artificial intelligence race couldn't get in because you had the uncertainty around the Middle East. Well, now that the stock market decided to completely ignore the uncertainty and just go up, pretty much everyone is piling on or possibly even buying back the things that they sold as far as software goes, as far as artificial intelligence goes. I think software stocks are doing well. Let's take a look. MSFT. Looks fine. Looks fine. Definite rebound. But again, a huge space to all-time highs. What about Google? GOOG. Okay. Google almost back to all-time highs. Google looks pretty good. If you want to bet on artificial intelligence, Google Gemini is a pretty good contender. Now, people think that there's just going to be one winner, like you had Google Chrome, or not Chrome, but Google was the winner of the search engine battle. I think it beat Yahoo, Mozilla Firefox, Microsoft, is it Edge or some Bing or whatever? Anyway, I think with GPTs, you're going to get specialized GPTs. So you're going to have a main one, maybe Google Gemini or ChatGPT, and then you'll have one for research purposes, like you have Claude, absolutely amazing software. Then you have maybe one for producing content. Then you have one for medicine. You never know. So I don't think it's just going to be one winner who sort of beats all of them. I think it's going to be multiple GPTs, and they're going to specialize in something. So Google is one of my picks. I think buying Google is a smart play, especially if you want to bet on artificial intelligence. Google Gemini is great. I use it all the time, pretty much every single day. And they have a stock, whereas ChatGPT or OpenAI, they're not publicly traded. So tough to invest. But Google, pretty easy, pretty simple. Microsoft, personally, I wouldn't touch. I think Microsoft is, I think they are invested in OpenAI, but I mean, just far away from all-time highs. I don't have the confidence. You call that healthy? I mean, it's moving. So I think it's much better than what you're getting on gold. I think this is troublesome. I think the dollar is troublesome, but the Nas crushing up higher. So at least it's moving. As long as it's moving, we can make profits. If it's flat, we can't do much, or we can lose all of the profits we made in the trending periods. But if it's acting crazy, moving higher, that means there's going to be a correction, a big one. You can make money in the correction, or you can make money once we continue on the uptrend. So I love to see trending markets, no matter how crazy they look. That is about it from me. Don't go anywhere, because you have the next show host coming on. It's going to be Tiger. So good luck in the markets. Catch me tomorrow for another DNA Fund giveaway. I wish you good luck, and I will see you in the next live stream. Goodbye.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across, with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader, all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently, with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Happy Thursday to you. Hope you're all doing well out there. Starting to get some more stormy weather here in Kansas. Tornado season is upon us. So hopefully I'm here tomorrow. But anyway, we'll be all right. We're used to it. Yeah, I do have a few things I thought I would chat about. So yeah, number one, I did take an L on that UK, that FTSE trade. That I was telling you guys about. Remember, it had a bullish signal all the way since April 1st. And then, of course, the trading gods are laughing at me because it goes off the EdgeFinder the second I get into the trade. So took an L on it. And it was really just because of a little bit of slippage on one of my accounts. I did not like that. Because if you look at the chart here, you see that I should still be in this trade because of that. But yeah, it just got kind of a bad wide spread there for a minute and took me out. And then, of course, it's rebounded. So at this point, it's just going to laugh at me, and all I can do is laugh at it. So there you go. It's probably going to go now to the take profit. Just the irony of it. But I am still in that Netflix trade, which I just wanted to mention just because it looks like they did a $25 billion buyback on some of their shares. And so we got a 0.5% spike up in the pre-market this morning. And so it's looking still pretty okay, I would say. We'll take a quick look at that. Let me know in the chat, guys, if you have any tickers or anything you'd like me to have a look at, and I could definitely do so. So yeah, there you go. Again, we had a little bit of a spike up this morning on that news to kind of retrace it so far, but nothing left for me to do except just ignore it go about my business. So that is an update on the Netflix, and that pretty much covers my trades for the moment. We did get Euro and British Pound PMI data come in, and I was looking, guys, taking a look over here at the currency map, the surprise index rather, and we've had quite the shuffle over here. Look at the British Pound now. King Dingaling sitting alone at top, 100%. And the Aussie got a nice jump up as well. The yen actually got a little more of a spike up. So the dollar is all the way down to 4th. It's below the 50% Mendoza line as we speak. And then the euro, which was the number one currency when it comes to the high impact events, the fundamental events, guys, went from 1st all the way down here to 5th. Okay, it's below the dollar. I just personally ignore the rand and the lira and the yuan just because I don't trade them. But it's nice to have them on here at the same time, just to kind of see what some of those other currencies are doing, especially the yuan, which is tied to Australia's market. So that's where we stand. Kiwi is still in the basement if you don't count the lira, which is at 0. So, yeah, just taking a look over here at the dollar, which, by the way, did, again, go below the 50% line, and largely because of the jobless claims number that we had come in. I don't think this is like that gigantic of a deal. It only missed forecast by 2,000 on a $200,000 number here, but nevertheless, it's a bearish reading, especially when the previous one was not a bearish box over here. So, yeah, $1.45, a little bit below average, but look at this. Look at the pound. Nothing but blue, and you got a couple neutrals over here. So, fundamentally speaking, if we're just isolating the high impact events, it's looking pretty good. No one's watching movies, poor Netflix. Yeah, I hear you. Yeah, I just got sucked into that gigantic drop despite the positive earnings. So I just thought I would take a little stab at it. It's not anything where I bet I didn't bet a regular percentage on it as far as the risk. I actually stepped down the risk a little bit. And the main reason I did that, in all honesty, is because if I go to my hourly chart, you can see that my 50 EMA went below the 200. So in a way, I kind of broke my rule there, but I was more so looking at this on a little bit higher of a time frame where the 50 remains above the 200. So yeah, it's going to be interesting to see if this daily supply zone up here is in fact going to keep pushing it down to the, to the next zone. I just looked at this as a pretty decent weekly demand. I say decent because I don't in any way, shape, or form call this a strong weekly demand zone. But it is a weekly demand zone, nevertheless, because I did get a little bit of a gap from that. So, yeah, at the end of the day, this zone down here is way, way, way stronger looking than the one I bought at. But I just figured in the short term, having that big, ugly drop right here, I just figured we might see a little bit of a rebound. And it looks like it's trying to want to curve a little bit. The one thing I liked as price came into the zone, and again, this translates to FX, gold, silver, whatever, okay? Supply and demand is supply and demand. So, but what I liked is as price dropped into my zone, you can see the volume started getting lower and lower. Okay. So yeah, we had that big, ugly drop, but then the volume started to slow down a little bit. So I kind of look at that kind of longer term as just a little bit of a bull action like this, Chinese walk, whatever you want to call it. Right. That's kind of my thinking on that. Plus the stock box guys was giving us a +10 score on this thing. So I do believe it was, +10 right here. So that's quite strong. Again, guys, if you're interested in stock trading, definitely check out the stock box with A1 Trading. I'm sure they can help you out with a discount on that as well. I know the EdgeFinder has a 45% off. Pretty sure that's correct. So yeah, just definitely check in with them about that if you have any interest. And not to mention Ola Prime, guys, Nick does have his 35% discount. You got the code right there, the QR code, if you just want to use your phone and take a picture of it. Otherwise, manually, you can just punch in A1 Live over on olaprime.com for the account of your choice. And then just as a refresher, I know I mentioned this the other day, if you are a fan of instant funded accounts, meaning you just skip the challenge phase altogether, they changed their consistency rule from 15% to 25%. So it's just a little bit simpler for you on that front. So I don't know of a whole lot of prop firms that have done that. Most of them are 15% on the instant funded accounts. So yeah, if that's of interest for you, if you want to just skip the challenge phase altogether, pay a little more and get you that instant funding, then that'll surely help you out there to save a lot of time as well. So there's that. Dollar yen, guys, I wanted to show something over there because we are getting, or we at one point was getting a bullish signal. I guess it fell off, but that's fine. Just wanted to show an example of something that I like to personally use as far as determining what trend is if we've got some congestion. And I do believe, let me go find dollar yen. Yeah. So let's just take a look at this right side of this box over here. Okay. So this is my daily. And as you can see, we've had an uptrend, but obviously during the war and shortly before the war, it started to go sideways. This is just one gigantic sideways consolidation if we just step it up to the higher time frame, right? Now, obviously, if you go smaller time frames, you can start to see some trends. Okay, you can find some trends up, you can find some trends down. But as far as determining the overall trend, it just looks like a cluster, you know what. So something I like to use with my 8 and my 21 EMA that I know you guys have heard me talk about. One thing I like to use is determine which direction is that 8 going from the 21. So I'm just going to turn off my drawings for a second. And what I want to show you is the 8, which is the dark red, and then the 21, which is the light red. So if I'm trying to determine if I want to take advantage of a long trade, because we were getting that long signal, remember, on the EdgeFinder up until today, but the example still remains the same. Well, when that signal first appeared on the EdgeFinder, as you can see, okay, if I just kind of zoom in a little bit, it was somewhere in this area. Well, my 8 was getting closer to the 21. So I look at this as the alligator's mouth closing. So picture an alligator. They're closing their mouth. Okay. The point of that is this makes me not want to be taking advantage of a long signal or a short signal, even if I had a short signal, which, we had a long at the time. It wasn't until the alligator started opening his mouth, like you can see here. That's when I started to be a little more interested in it, because that tells me that the trend is starting to wake up a little bit more. Okay, because the 8 is going away from the 21 a little bit faster. So that's just one little trick I wanted to show you guys in case you start running into this situation where you've got an uptrend overall when we look to the left, but when we're just concentrating on recent candles, and it starts going sideways like this, well, how the heck are we supposed to know what to do? Sideways, right? So I just thought I would point that out just in case that might help anybody out there. Basically, when we're looking at all this price action here, yeah, like I said, alligator's closing its mouth. And I know that sounds cheesy or cheeky, but hey, at the end of the day, it's a kind of a nice piece of help there. And then, yeah, like I said, as we start to see the alligator's mouth opening, that's where it makes it a little more conducive to take advantage of that long setup, possibly. So hopefully that helps somebody out there. I actually made a shorts on it today, put it on my app Trade Like a Tiger social. So be sure to check that out on the Instagram. Specifically, I put it on the Instagram. So yeah, just thought that might help somebody out there. Morning, Alan. Good morning. Good morning. Good morning. Let's see here. And as far as EdgeFinder goes, let's see. Oh yeah, one other thing I wanted to show you guys, because right now I've got a few technical ideas. I just thought I would run by you guys just to see if this might help. So when it comes to Bitcoin, we're obviously getting a nice bullish +7 score on this thing. And as far as looking for pullbacks into zones, into demand, let me go to let's see, what time frame did I have that on? Yeah, I had it right here. Turn my drawings off for a second. Okay. So something that I like to do when I'm trying to determine a pullback, like how big of a pullback I may expect to get before, looking for a zone to buy on, is when I look at this uptrend kind of starting back here at the beginning of the month, what I want to do is reasonably look at the pullbacks during this uptrend and see how big they are. So like if I look at this pullback back here, just visually, you can just kind of gauge kind of the size of it, right? And then we go to the next big pullback and you can see it's a little bigger. It's a little higher up, okay? And then we go to the next big pullback and you can see it's even bigger. So the pullbacks grow the higher up we go. So when we get to where price is currently, you can see I've got an alert right here. Well, you tell me, does this pullback from here to here look like it's the same size as this one here? No, it's a little smaller, right? So the reason I point this out is because that tells me that this may not be a very high probability pullback. It may just chew right through it. Because if I expect to get at least this size of a pullback, if not bigger, because the previous ones kept getting bigger and bigger, well, then that should give me a reasonable expectation to say, hey, this thing could come all the way back to that first zone at the origin of this overall strong move up, which is the ones I prefer to go for anyway. Just to give me a heads up and say, well, maybe I don't want to pay as much attention to this zone here, which I was looking at on a 1 hour time frame. Okay. Maybe I should just focus on that one. Now, obviously, guys, trends change, but this is just one simple little trick I thought I'd show. It's something that I've used a lot in the past. I've just never thought to really bring it up. But yeah, you got little, you got bigger, and then obviously if this one continues that same trend, we get a bigger pullback, then this looks like a more reasonable spot to take advantage of that long position rather than the one that I initially drew up right here. Okay, because that still looks pretty good, but you can't deny that this would obviously be a cheaper zone down here. It's down in the discount zone if we look at our trend at our curve analysis. Okay, I'd actually have to kind of redraw that a little bit. So let's do that. And yeah, so let's see here and get that deck over here. So there you go. Okay, trend. There's your curve because we're looking at the overall, the bigger swing low rather than the initial one I was looking at yesterday. So obviously that puts this discount or this demand zone down in the actual discount zone, if that makes sense. And then that changes this to where it's now in the middle, diddling in the middle. See, the initial thought I had on that was the fact that we had some former, a little bit of resistance back here, a little bit of resistance here, but I don't think these are very major. Would you guys agree with me on that? That's not a very major resistance point. Now, this is a major one up here, and this is a major one down here. So that's something I got to looking at earlier this morning when I was looking at Bitcoin. I thought, you know what? I don't think I'm going to be paying as much attention to that. I think I'm going to wait for that zone a little deeper. But yeah, it all just kind of goes back to, again, just looking at the pullbacks, because we know this is an uptrend, but we have to reasonably look at our pullbacks so that we have at least an expectation of how far back it may come back before grabbing into our zone or whatever your trading strategy is. Doesn't matter what your trading strategy is, but we have to have those expectations because strong trends have pullbacks. But this, I think, is a little bit more of a simpler visual way to guesstimate. Okay, nobody's going to guess it perfect, but just have the expectation that we will have at least that size of a pullback here or bigger. So that was another piece I thought I'd show you guys. Let's check NAS 100, says Vishal. Yeah, absolutely. NASI. I think NASI is, okay, +5. And just for context, the Dow is a +6 and the S&P is a +5 as well. Okay, so they're just barely making the cut. So let's go look at the indices over here for you. And guys, for me, when I get in the mornings, well, actually, never mind. Hold 1 second. Oh, okay, never mind. I was just getting a piece of news. So yeah, let's go to the S&P for you and the NASI, which is the one you wanted to check. So really the theme is kind of the same thing with me. When I'm looking at the higher time frames, which is where I prefer to be buying in demand, I don't like hardly any of these. Now, I did draw up one on Nasdaq here just below the 26,000 line. But these things have just been straight up. And really, I think the better looking zones are further down this curve if we're just looking at this curve on a higher time frame. Okay, I just went out to a week just as an example. On a weekly time frame, clearly this is our swing low. So this is where we would have to start a curve analysis, and we're obviously at the top. So I don't know. I just feel like the better looking zones are a little down here, a little further down. Of course, they'd be on a 4 hour. So on a 4 hour, okay, there's a pretty decent looking demand here. I drew this one up, but I need to actually lighten the color just so that it tells me there's something funky about it. And what's funky about it is when it did get that fair value gap in all fairness and gapped up, it did not even break this structure over here, guys. So if it doesn't immediately break a structure to the left, then that just tells me it's not as strong. It may not be as strong as the way it looks. Yeah, the gap makes it look pretty good. Yeah, we did have quite the expanded range on the volume spread analysis candle down here. So that's above average volume or above average trading activity. But the reality is the momentum didn't even have the strength to carry it over this structure. Okay. This one over here looks a little better. I would still say it's not the best, but it's way better than this one because when we did get that push up, we ended up breaking this structure over here. Okay. We broke all these minor structures here. And then we broke this one here. We did get a little bit of a pullback, but we kept going and broke all the rest of these. So at least we broke one of these. I would say maybe a little on the, I don't want to say this is a major structure, but maybe intermediate structure. Okay. There's levels of structure points too, right? I think these are minor. I think that's intermediate. And then if I scroll further back, then obviously there's some major ones up here, right? Just basically means how far is momentum carrying us on that initial move out of the consolidation or out of the base. In this case, the zone itself, the demand zone. So that's just where my favorite ones are. I did draw one up over here though. So let's go dig into that a little for you. So this one is okay. 1, 2, 3, 4, 5. There's basically like 5 basing candles to the left though. And that's part of what my issue is with it especially on a 4-hour chart. That's 4, 8, 12, 16. You could call that 20. We'll just call it 18 hours. Okay, that's 18 hours in that basic area. If I just move this further over. I don't know. You tell me. Do you think that's plenty of time? If I'm a big bank, I'm an institution, I'm trying to accumulate. I'm taking this base rally. We're at the base at this point. I want to take price higher. Is that enough time? Is that plenty of time for them to get their gigantic order in, assuming they're putting in a gigantic order? I don't know. It just makes me hesitate a little. If we would have had 1 or 2, 3 less candles in this area, this would be an awesome zone. But when I see this much time spent in that general zone, that general area, it just gives me a little hesitation is all. Just a little. So if price were to come back to that area, I'm not saying I wouldn't trade it. That's obviously why I put an alert there, because I do want to keep an eye on it. I just may not put in a full position. Because part of me wonders if that bank, that institution, or whomever the whales are that are putting a big order in right there, trying to get it right on the line there, perhaps they had enough time. I don't know. Because they can't put in their full order, because otherwise price will move away too fast and they'll get a horrible fill. But is that enough time? 16, 18 hours? I don't know. So that's the only thing that makes me hesitate on it. But again, I would consider buying from it, just may only put in a partial position. I want to get in the game because you can't deny the strength of these things. But at the other end of it, again, if I just take another look at doesn't matter, daily, weekly curve, well, the swing low is way down here. So that would technically be up in the top third or almost in the middle. It would be the top third. So it's in a premium zone. It's expensive is all I'm trying to say. But just because I think it's expensive doesn't mean it can't just turn around and keep going higher and higher and higher, guys. We see it all the time. Look at gold at the start of last year, right? We kept thinking it was too pricey, or I should say the start of this year. We kept thinking gold was too expensive. It's too expensive, but then it just kept going. Now, if we sign on the dotted line, we get that war over with, then yeah, it wouldn't surprise me at all to see a move like that. Just, keep on going, keep on going. I mean, I wouldn't necessarily call for it. Then at some point, perhaps we just go down to a smaller time frame to find a better looking zone down there, because the bigger ones, just to me, aren't really looking the greatest. Again, I'll give you that one. It is a little below the 26,000. I guess you could call that a psychological number. I wouldn't necessarily call it a major one. 25,000 would be a little more of a major psych number, but that's a lot deeper. So yeah, I like it. It is a little on the skinny side. It's only about $100 range on a $26,000 instrument. I would prefer that it would be a little deeper, a little bigger of a zone, something like this. But we get what we get. So at the end of the day, yeah, I'd be placing an order there. But rather than squeezing in my stop loss, I'd probably give it a little more wiggle room just because of how narrow it is. So that's kind of my thinking on that. The only other option would be to go down to a smaller time frame and start looking at some of these pullbacks in here and seeing if we got any zones. But I don't like any of them because none of the candles are expanded range. They're all just very small candles after they come out of the pullbacks. So I don't like that. It's not very, there's no major momentum on those. Okay, here's a 15-minute time frame. I don't like that because we didn't really get a follow through there. It took a while, but we did. Remember, it's all relative to the time frame we're on, if that makes sense. So yeah, as much as I want to be in one of these index trades, yeah, I just don't like the zones unless we go a little deeper. And that's as pricey as I'd want to pay for right there, 25.9. Okay, so Nasdaq. Anthony says US 30, good opportunity. Never yet break. It's taking its time if the war is over. We're going to drop. Yeah. So let's go look at that for you. Dow 30. Okay, so over here I've got a zone. And in fact, I want to measure something real quick. Price to this zone is 4% drop. Let's go to that Dow. Okay. So that's about almost 3.5%. So see this paints up just a little bit better of a picture, I think. Because on Nasdaq, how we had this big strong move up and then that pause and then continuation, at least on the Dow, we had a strong push up, but then we had a little bit of a decline. So it didn't just stay in the general area. It came down a little bit to give us a little cheaper of a discount, a little better of a demand. So to me, this almost kind of resets itself in a way. If I'm looking at curve analysis from swing low to swing high, see, this is almost just continuation. That's basically all this is over here on the Nasdaq. Okay, rally base for a minute and then rally. But the Dow was a rally base, a little bit of a gap down drop, and then it kind of formed and created itself out in cyberspace. You guys have heard me say I don't want to see a zone have candles to the left of it. Well, this is a good example of what I'm looking for right here. Okay, we had price go higher up, but then it dropped and then created itself and based, and then we got a new push from there. So I really like this on the Dow. That's why I put that alert there, 47,809 area on a 4-hour chart. Keeping in mind, I've got my 8 above my 21 EMA, and that alligator's mouth is opening up. So the trend looks great. EMAs look great. Obviously, we have a bullish signal on EdgeFinder, which trumps all of it. Okay, so that's the reason to even look at a chart. If I don't have it on the EdgeFinder, I don't even look at the chart, guys. I'll go 3-4 weeks sometimes without looking at some of these major assets, just because I don't. If I don't have a good enough reason between the fundamentals and the sentiment, then why even waste my time putting on zones? That's where I killed a lot of time in my younger days, just putting zones on all 28 major and minor currency pairs, and then wondering where the time goes, and then only using 5% of it. That's the best part about the EdgeFinder, is it tells us the main things to worry about over here. Okay. Every Sunday, I'll go and clear out all my old alerts, and then I'll go down the list one by one and just start putting up brand new alerts so that I can get a brand new, fresh perspective on the upcoming week, considering everything that happened the week before. So anyway, just kind of wrap this up in a bow. That's probably my favorite spot on the on the Dow rather. And then we'll finish out with the S&P real quick. I think I got a couple minutes left. Is CFD trading good to trade? Man, that's for you to decide. It can get a little sketchy sometimes because at the end of the day, the brokers end up carrying your trade in-house. So a lot of times they're taking the other side of it. And then sometimes they'll even do the opposite in the real market. So you're basically trading with the broker. So it just depends on everybody's risk tolerance. It depends on your level of care. Do I care? I mean, hey, as long as you profit and they pay you, that then doesn't matter. But sometimes you can get too profitable and they can make up excuses not to pay you. So, I don't want to get blackballed, but yeah, there's some sketchy games. There's some sketchy games that some of them play. So the best thing I can say is just do your own research and due diligence on whatever broker of choice you're looking at. And that goes the same thing with prop firms as well, guys. Okay, do your due diligence. We'll give you our ideas and opinions on them, but at the end of the day, everybody has their own risk tolerance and their own level of what they're looking for in a broker or a prop firm or whatever the case is. So anyway, just to finish up real quick because my alert went off. S&P over here, yeah, I don't like any of these guys. That's kind of the quick answer. We've been sideways for the last 4 days, and I don't like any of this area as far as looking for demand because it's just too many candles. There's no gaps. The only gap we had was right here, but as you can see, it's already been filled. See, for one fleeting moment, you could say that this right here was a demand because we had a gap out of that. But look what happened. We gapped down into it and took off. Okay. Assuming you buy and sell and supply like I do, buy and demand, sell and supply, there's your supply zone. Okay. You'd have been out of this trade right here at the base. So there you go. That technically was a winning trade right there. But at the end of the day, that's just way too many candles. So I would have ignored it. I think the US 30, like you mentioned, is the best one, Anthony, out of the three majors. And then, that's kind of where I stand. So I'll be keeping an eye on that. I am looking for Bitcoin to drop a little deeper, guys. And I'm trying to see if Netflix wants to go and pay me because I've had about 2.5 weeks where I haven't been placing hardly any trades. Kind of echoing whatever everybody else said yesterday. It's just been a crazy market, but we need a document signed on the dotted line so we can get the geopolitics and the drivers there off to the side and start focusing on the hard data again. That's what I'm after. I think that's what everybody else is after as well. So with that, ladies and gents, hope you learned something today. I'm going to get up out of here, go back to work. Hope you have a wonderful day. Stay safe and look forward to Friday. It'll be Friday tomorrow. Take care, guys.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.